Welcome back to the European Market Open. A minute to go until the start of cash equities trading. I'm Anna Edwards in London with Tom McKenzie.
And here are your top stories. Presidents Biden and Xi speak on the phone amid US frustration over dead-end talks with China. The lady isn't tapering. The ECB slows the pace of bond buying, but Christine Lagarde insists it isn't a move to wind down emergency stimulus. And Biden's vaccine mandate. The president calls the unvaccinated a threat, requiring shots for federal workers and pledging new rules for large private firms.
Let's take a look at the futures then, Tom, as we are just 20 seconds or so, 15 seconds away from the start of the European equity trading day. And European equity market futures have been pointing higher and they continue to do so. FTSE 100 futures up by just shy of 0.5% right now. So we are expecting some of that positivity through the Asia session, in part driven a little by the geopolitics and reassurances around China tech. We're expecting some of that to feed through, despite supply chain concerns at Toyota and the car space in Japan then, Tom.
Yeah, despite that, put that to one side. It's the Asian session that is driving the optimism once again this week, putting aside what was a bit of a sour mood over on Wall Street. Of course, as you say, Anna, we had that change in terms of the sentiment around Chinese technology. The Nikkei, Japan, back comfortably above 30,000. That is feeding into the session this morning in Europe. Here's what we're looking like. And of course, this is on the back of that ECB decision to pair some of those bond purchases across this region from about 80 billion to between 60 and 70. Of course, the focus on that meeting in December and the APP, the flexibility around that. This is the open as things stand then. The FTSE 100 gaining 0.3%. The CAC 40 is up in similar territory as well, gaining 21 points. In Spain, also gains of 0.3%. If it was a taper, and of course Christine Lagarde said it was not, then it was a very dovish one. That is the view, it seems, from the markets. Anna.
Yeah, the lady is not tapering, as she said. European equity markets then, in that context, opening to the upside. Tom, the ECB will slow the pace of its pandemic bond buying program in the final quarter of this year. It's a shift that President Christine Lagarde says does not amount to a taper, as we've been discussing. She spoke after the central bank's policy decision.
The rebound phase in the recovery of the euro area economy is increasingly advanced. Inflation increased to 3% in August. We expect inflation to rise further this autumn, but to decline next year. The new staff projections foresee annual inflation at 2.2% in 21. We see the risks to the economic outlook as broadly balanced. The lady isn't tapering. Because what we are doing is recalibrating PEP.
Christine Lagarde there with her interesting Thatcher reference. Thushka Maharaj, JP Morgan Asset Management Global Multi-Asset Strategist, is with us this morning. Thushka, very nice to speak to you, to get your insights this morning. I mean, call it a taper or don't call it a taper. I guess there certainly wasn't any tantrum.
Absolutely. I'd say the ECB would be very happy with the outcome of yesterday's meeting. Essentially, they have started reducing their asset purchases or recalibrating in the words of the ECB, and they got a dovish outcome. And I think markets now are going to become much more dependent on the outcomes we see on inflation and activity data. So there will be more dependence on that. But I think the ECB did a fantastic job at recalibrating while not triggering, as you say, a tantrum.
Okay, so a fantastic job when it comes to the communication, Thushka. But there was one line that stood out from your notes to us in terms of the caveat to that, which is that the decision increases the risk that the ECB stance is misinterpreted by the markets. Unpack that for us.
Yeah. So there's two parts to this. One is, what does the ECB do in the short term as we re-emerge from this pandemic, as we see economies reopen? And this recalibration, I would say, is a function of that reopening. But the second part of this is, what is the medium-term goals of the ECB? How does this fit in with their strategic review? And on that front, I think there is some confusion. There is likely to be more confusion in the market as inflation does pick up. How does the ECB react to that? If you had to purely think about the strategic review, that would argue for the ECB remaining extremely accommodative, even while inflation does pick up in the near term. When we look at their staff projections increasing those 3-year ahead forecasts by a mere 0.1%, does still indicate a very dovish central bank over the medium term. And I think it will be a communication challenge for the ECB to manage the sort of cyclical view versus that structural weakness in inflation. We have high confidence that they are they have adjusted their framework. They will focus on keeping stimulus in place well into the coming years because of that subdued inflation outlook. But there will be challenges as we recalibrate QE in coming months.
Yeah, it seems that the Dubs at the ECB, Thushka, then are able to say that they've done this because of financial conditions and they didn't warrant any higher amount of purchasing. The Hawks will be able to say that they've done this because of inflation fears on the horizon, so they sort of each get to sell it. But the inflation estimates that the ECB put out, as you point out in your notes, not all that high. So it seems they are still not, as a body, as a group at least, still not assuming that inflation is sort of entrenched and systemic and much higher from here.
Yeah, that's a fair point, Anna. And actually, we've been watching how inflation break-evens have traded. These are long-term inflation expectations. Five-year forward European inflation, we're taking quite encouraging signs from that. Moving up in the near term, but as you say, the medium-term structural issues on weak inflation still persist in the euro area. It's an open question on the ability and the ability for central banks to reflate those long-term expectations. But if there's a time where you would be optimistic that Europe, either through the European Recovery Fund, the strategic review from the ECB, and potentially a more stimulative German government in coming years, all of these factors would increase the chances that we do see a regime shift in inflation expectations over the medium term in Europe.
Okay, Thushka Maharaj from JP Morgan Asset Management, global multi-asset strategist, stays with us. We'll be getting market views just in the next few minutes. Okay, coming up, President Biden orders shots for millions, calling the unvaccinated a threat. We'll bring you the latest in the response to the pandemic, what it means for markets next. This is Bloomberg.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The internal assurance of the United States always protecting us. That's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. 9 minutes into the European trading day. A strong session in Asia, bleeding into the markets here in Europe. Gains currently of around 0.1% across these 0.2% across these European markets.
Yeah, so modest gains being made across these European markets. US equity market futures still pointing to the upside by around 2 or 0.3%. Let's, Tom, have a look at some of the individual movers that we're focusing this morning. And I'll start with LVMH in the luxury space, up by 1.6%. According to HSBC, it's better placed than its luxury peers, and HSBC is upgrading this one to a buy. They cite the scale and diversity of the business that will help it to navigate a slower growth period for luxury stocks better than peers. So quite a positive review there.
Okay, that's the luxury space, and we're going to look now at the banking space. So you've got Nordea, the bank there. You're seeing the biggest owner taking another step towards exiting its holding. This is the third time, by the way. Sampo Oy, which is a Finnish insurer, selling down, offering stock to investors in a deal worth about 745 million euros. They want to be out of this position, they've said, by August. You can see the shares there on Nordea down at 1.4%.
Let's have a look at Atos. This is the French IT services business, and we've had the announcement this morning. It is going to be removed from the CAC 40. It's the worst performer on the CAC year to date, and the stock is down in just today's session 2.7%. As I say, IT services business based in France. Now, get vaccinated or else. Biden orders large private employers to mandate coronavirus shots or testing, crucially, and will require all executive branch employees, federal contractors, as well as healthcare workers to be vaccinated. Federal employees who don't comply may be dismissed.
The Department of Labor is developing an emergency rule to require all employers with 100 or more employees that together employ over 80 million workers to ensure their workforces are fully vaccinated or show a negative test at least once a week. Some of the biggest companies are already requiring this. United Airlines, Disney, Tyson's Food, and even Fox News. This is not about freedom or personal choice. It's about protecting yourself and those around you.
Okay, Thushka Maharaj, JP Morgan Asset Management Global Multi-Asset Strategist, is still with us. So the president's mandate there underscoring the concern in the White House about the continued spread of Delta, of course, the unvaccinated in the United States. The data suggests, at least the concerns from Wall Street banks, the Bank of America, Morgan Stanley and others, that the recovery is starting to falter in the US, largely, or at least one key component of that, of course, is the spread of Delta. Where do you think things stand? You are pro-risk at the moment. Does any of this change your view on US equities?
Yes, as you say, there's a recalibration, not just at the ECB, it's also in terms of growth momentum. And, I think it's worth bearing in mind that even though we are seeing a slowing in growth momentum, the slowing is happening to a pace of growth that's still going to be stellar. It's still going to be significantly above trend in the US. We have strong monetary support. We have financial conditions that are extremely easy. And you're right to point out that the market is vulnerable to that recalibration as growth momentum does slow. But what we do know is that actually the US large cap equity market is the highest quality region for us to be investing in, especially in a period of that recalibration of growth. So we remain pro-risk, as you highlight, and we increasingly positive on that U.S. large cap space, because we do see them benefiting as a growth momentum does slow. From an economic perspective, we see the U.S. economy moving more to a mid-cycle phase. And what's different this time, or very interesting this time, is that the policy outlook, so the monetary policy outlook, remains uber accommodative even as we make that transition. And that for us is very supportive for assets.
And Thushka, I suppose some large cap American stocks are not so bothered by supply chain disruption because they don't deal in stuff. But those that do deal in stuff, this is a big concern, and increasingly so. And it's been an ever-present theme in the auto space. We've seen the Toyota news this morning, but it's something that is being talked about in other sectors as well. Are you concerned that this is something that limits the global recovery? Because it might not be that demand doesn't live up to expectation, but perhaps supply just can't keep up.
Yeah, Anna, that's an extremely reasonable point. 3 months ago, we thought that supply chain disruptions will start easing by now. We clearly are not seeing that. And in fact, we could see a continued delay on that sort of, that re-onboarding of supply. And so that, that does feed into the slowing of growth momentum, or at least this recalibration. There are winners and losers that emanate from this disruption, and we see that more affecting our cyclical market exposure in the euro area. For example, you mentioned autos, and in Asia, but we do see U.S. large cap markets, especially the quality parts of that, still being a beneficiary in this period of disruption. What I would say, the thing we are watching very closely in terms of disruption on the supply side is its inflationary impact, rather than purely the constraint it places on demand.
Okay, I mean, that takes me on to my next question, which is we speak to a lot of people who say, look, the next catalyst for these markets are once again earnings. And there are diverging views as to how strong or not they're going to be. In terms of that dynamic around growth, and then the question that Anna posed around supply chains and the pressure then on margins, how does that fold into your view on earnings?
We still have a very, strong positive view on earnings, but I would say that the main delta, or the main change in that view, is we've seen the significant double-digit earnings, profiles already in the first few quarters, in the last sort of, I'd say, year of earnings data. We're now moving into a phase of momentum slowing in earnings. Yes, your absolute levels of earnings remain very strong in the US. They still, significantly above trend, and closer to 10% than 5%. So they remain high, but it's the relative change that is slowing. So yes, you're right to point to where's the distribution of risks. They are towards a slowing of momentum. But when we think about the phase of cycle, the monetary policy support, and the expectations that the quality of returns or earnings in parts of the U.S. large cap market are well maintained, that still keeps us positive on that market. Where I think this does translate directly is views in cyclical spaces, whether that's Europe and potentially even Japan, where we would be reviewing those views post-earnings season.
Thanks very much. Thanks, Thushka, for your time this morning. Good to speak to you. Thushka Maharaj, JP Morgan Asset Management, Global Multi-Asset Strategist. Let's get a Bloomberg Business Flash. The corporate news we're tracking this morning. Here's Laura.
Thanks, Hannah. The world's #1 car maker is cutting its production outlook. Toyota will make 9 million units over the fiscal year to March, 300,000 fewer cars than planned. It says the spread of the coronavirus in Southeast Asia is to blame. UK wholesale electricity prices surged to £2,300 a megawatt hour for a period earlier this week as Europe continues to face an energy crunch. The peak was more than 10 times the price seen the following morning, highlighting the current extreme volatility in the market. Low output from wind generation is exacerbating a lack of natural gas supply across the continent, with record prices seen in Spain, Germany and France. Amazon says it will pay college tuition fees for some frontline employees in the US. The company will spend an extra $1.2 billion by 2025 on the package, including for the first time paying the complete cost of college tuition. Amazon is the latest big employer to offer educational perks to attract workers in a tight labor market. That's the Bloomberg Business Flash. Tom, Anna.
Laura, thank you. Okay, coming up, it is September, of course, and offices were supposed to be buzzing with workers back at their desks, but many companies from London to San Francisco have delayed their comeback plans. We discuss more. This is Bloomberg.
Session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
The M&A business has gone, like you said, 20 years ago it was a tactic. You went to the GE board, just to pick a name, and it was a tactic to get a strategic opportunity done, and you may or may not do it. Today it's actually an industry, meaning there are firms that are in the business of doing M&A. They get given money, $25 billion, some of them, $30 billion. I think we'll see a $50 billion fund before the next 5 to 7 years are out. And they want to do transactions. Now, they also delegate down to junior talent like we are. So the biggest checkbook in the world 20 years ago was Jeff Immelt, maybe at GE, and today a 37-year-old at a major PE firm may have a bigger M&A checkbook than the Fortune 10 did 20 years ago.
You think we'll see a $50 billion private equity fund?
Oh, definitely. I mean, people forget that in 2000, when KKR did the big millennial fund, it was like $5 billion, and that was only 20 years ago. I think, and I'm not up to, I think KKR reported that they raised $67 billion in the first quarter. So, look, the acceleration of capital into private equity, the attributes of it, I can't see why it wouldn't happen.
Add leverage, it's firepower of $250 to $300 billion. It's remarkable.
Markets have grown.
Ken, I've always known you as someone who'll go anywhere and talk to anyone if there's business to be had, even if it means getting up in the middle of Thanksgiving dinner to catch a plane. A story we can tell later. What about China? Do you agree with George Soros that doing business in China is no longer morally justifiable because it's tantamount to supporting a totalitarian regime?
No. And the reason I don't agree is not that I have is that I'm a business person. And, you know, there are politicians who make that. I think the amount of business people that are getting involved in these issues because they think there's only one side of an issue. Look, the reason things are issues is because there's two sides to it. China is something that our government should deal with, in that sense. In my world, you know, I try to look at business as business, and I think there's way too much pressure or way too much focus on business trying to get involved in issues. Let me tell you, most of these issues are 55-45 or 60-40, and there's a lot of people who think there's clarity on what side you should be on, and I think that's very dangerous.
Ken Moelis there talking with Bloomberg's Eric Schatzker about the intense war for talent on Wall Street and those investments in China. The other key discussion in big banks at the moment, beyond that talent question, is the return to office. The week following Monday's Labor Day holiday was supposed to be a marker for corporate America's long-awaited return to normal, but the Delta variant has upended that plan. Many large companies have delayed their comeback entirely. From New York to Hong Kong and London, the return to office differs widely between cities. Bloomberg's Ritika Gupta joins us with a breakdown of what's been happening. What are we seeing in the US to kick things off with, Ritika?
Yeah, Tom, we start with the US because we had a lot of news out over there yesterday. Microsoft and BlackRock both delaying the return to office next month, and they're saying they don't know when it will be safe to return with that Delta variant surging. Meanwhile, President Biden coming out and saying that large employers must mandate the vaccine or have testing requirements in place. But interestingly, Bloomberg doing a survey with over 100 of the bigger employees in the US and still finding that 53% not requiring vaccination for its staff. And it's interesting because on Wall Street, which has been some of the most aggressive players really in getting bankers back to their desks, you see them differing in their stances. So the likes of Goldman Sachs mandating the vaccine, but JP Morgan having not done so just as yet.
Yeah, and what we heard from Biden was different approaches for different parts of the economy. Some places mandating the vaccine, other places it's the vaccine or testing. What about Hong Kong then, Ritika? How are they doing there?
Yeah, Hong Kong, I want to take a look at this Pret Index. I know it's our favorite here, where we track the sandwich sales that are being sold at Pret a Manger. And you can see at Hong Kong here, we're really very close to this white line with pre-pandemic levels. And we have been so for some time. And this really because of Hong Kong's very strict approach. They're taking a no COVID approach here, and they've been isolating really from the rest of the world, but they have had some backlash from businesses saying that this could really put at detriment their label as being one of those key financial hubs.
Okay, is there a link between sandwiches and users on the London Underground, Ritika?
I mean, I'd love to talk about that because on London, we have seen such a pickup now in activity. Transport for London saying that the London Underground, we've had the busiest mornings going back to all the way of March of 2020. Now, we still are some 50% below pre-pandemic levels, but it does suggest that we are getting some sort of a slow return back to desks. It could also be partly that return to school as well factoring in, but very interesting here. And also, I will point out a story that we'll be watching next week is Goldman Sachs will be returning to full capacity in their London office, so dropping some of those social distancing measures.
Yes, my anecdotal evidence yesterday, Ritika, was certainly that there were queues, there were lines outside sandwich shops, lunch places in a way that I haven't seen, not even earlier on this week. So certainly things are picking up here in the city. Ritika, thank you very much. Bloomberg's Ritika Gupta. Coming up on the programme, combating climate change, we hear from the CEO of Zurich on the insurer's plans to get to net zero, including cuts to air travel of up to 70%. We'll talk about that next. This is Bloomberg.
China has been focused for a long time now on catching up to the United States in space when it comes to space exploration, and they've really made a couple of really impressive achievements. For instance, in May, China landed a rover on the surface of Mars. It's only the second country after the United States to manage to do that. In June, China sent astronauts to its space station, which is still under construction. China is not part of the International Space Station because the United States worked to exclude China from that. But instead, the Chinese are working on their own. That's scheduled to be in full operation, I think, next year. The Chinese have really come a long way in space. That said, all of that's run by the Chinese government. There is a role for Chinese companies to play in the space program. They're not being as front and center, say, as Elon Musk with SpaceX or Jeff Bezos with Blue Origin. China's companies are playing a more supportive role, I think it would be a fair way to say it, working on things like satellites, rocket launch operations. They're leaving the really big, sexier items when it comes to space exploration, leaving those to the Chinese government.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. 30 minutes into our European trading day, here are your top stories. Presidents Biden and Xi speak on the phone amid US frustration over dead-end talks with China. The lady isn't tapering. The ECB slows the pace of bond buying, but Christine Lagarde insists it isn't a move to wind down emergency stimulus. And Biden's vaccine mandate. The president calls the unvaccinated a threat, requiring shots for federal workers and pledging new rules for large private firms. The Asia session then, Tom, certainly in a positive way to end the week, really. We seem to have been plagued globally by fears about global growth, the spread of the Delta variant. That was really a dominant theme earlier on this week. We saw a lot of days of the S&P in negative territory, and yet we end the week on something of a high and some modest gains for European stocks.
Yeah, arguably investors, economists out there as well, grappling with the mixed data we're getting out of the US. We had those claims in terms of jobless claims coming in lower than the forecasts. How you work that through in terms of your picture on the wage market, the labour market, and what that means for the tapering timeline, of course, will be key. We had the ECB decision. They are going to be reducing, but there's not a taper. That is Christine Lagarde reducing those bond purchases, the emergency bond purchases, from about 80 billion euros to between 60 and 70. The focus shifting to December and the discussions then about the APP program, the asset purchase program, the flexibility. Let's check in on the broad markets then across the European markets. Down, up 0.2%, I should say. Across the board, you're seeing green. The FTSE is gaining 0.3%, despite the fact you had the GDP print for the month coming in slightly below the estimates. The DAX is also gaining 37 points. The politics remains in focus following that raid on the finance ministry. The CAC 40 is gaining 0.4%. You had the geopolitics as well, as Anna touched on. Xi Jinping and President Biden having a phone call. Just the second one, 90 minutes. Is that alleviating some of the tension between these two sides? Let's switch it on then to look at the sectors and how this is all breaking down on a sector-by-sector level. 30 minutes into the session here in Europe on this Friday. At the top of the list then, consumer. That is gaining at 1%, with basic resources and technology following closely behind. At the bottom of the list, your telecoms down 0.5%. Anna.
Now let's get to an exclusive interview this morning. Scientists have called climate change widespread, rapid and intensifying. And the topic will be in full focus, of course, at the COP26 conference in Glasgow next month. One of the industries most clearly affected by the climate emergency is the insurance sector. Zurich has this week announced measures to be a net zero business by 2050. It's aiming to cut air travel-related emissions by 70%, and it's opening a new sustainable headquarters building today. Joining us now in conversation, Mario Greco, Mario, the Zurich Insurance Group CEO. Mario, very nice to speak to you this morning. Thanks for joining us this Friday. Let's start with, and I think you're coming to us from your new headquarters. Let me ask you about its sustainability credentials, I suppose, but also how it works for a new hybrid working era. Are you building in assumptions about how full this office will be, how much people will work remotely? How is it all going to come together?
Yeah, good morning, Anna. Good morning to everyone. Definitely, we're heading into a completely new phase in working habits and working behaviors. Already when we started building this head office 5 years ago, we had in mind that occupation of the office will never be above 70% of the max capacity. So we already had in mind hybrid working and people staying at home for a number of days. We're happy for that, and we think that sustainability will further support this different style of working.
Okay, so Mario, that sustainability is built into this new office of yours. I have a question about underwriting in the oil and gas industry. What percentage of your revenues comes from underwriting that sector?
It's very little, honestly, because we haven't been underwriting energy risks or gas producing or even mining over the past years, honestly, not because of sustainability, but because of profitability of this sector. You know, the big issue about underwriting is the overall industry transformation towards sustainable way of producing, which is tough to do unless more economic incentives will be introduced, and this is why I've been advocating strongly for pricing for carbon in productions of the goods. If that doesn't happen, you know, all industries, all companies will not have an incentive to do the proper transformation of their businesses.
Okay, that's one solution. Or, Mario, you could just stop underwriting the oil and gas industry.
Which we do. I mean, we've been canceling customers, but to be honest, I mean, this is not a great satisfaction because as soon as we cancel a customer, somebody else underwrite the customer, and so this society doesn't get any better. We feel better ourselves, and we've been publishing the number of customers that we have let go, but it doesn't help. It doesn't make the planet more sustainable just doing that, unless everybody does it. Which is not what's happening today. So I think we'll continue doing that, and we will do our share of that, but it's not enough. We need to do more.
Can I ask you about M&A, Mario? And this is something that the insurance sector has seen quite a lot of, and I wanted to get your thoughts. There's a perception perhaps in the markets that maybe you've stayed away from some of the larger transactions that maybe rivals have done. Are you interested in larger transactions? Has it been deliberate to stay away from those?
No, we're not. And I think one of the reasons we've been successful over the past years was that we've been very clear that we do have capacity for M&A. We have done opportunistic tactical M&A and accretive transactions, but we're not looking for big transactions, and we don't want to be distracted. The whole industry needs to reshape, to transform. There is so much that you have to do in your house to fix it and make it more productive and more profitable, that big M&A transactions are a huge distraction and don't create value. And I think the market so far has rewarded our position.
Okay, so maybe bolt-on acquisitions is the strategy. In terms of the asset management side of the business, Mario, would you be looking for some acquisitions to grow your footprint there?
Not really. Again, I mean, we don't see acquisitions in asset management as a solution for us. We've been doing very targeted, for example, acquisitions in the fintech space to deliver new digital services to customers. We acquire a telemedicine company. We acquire specialized data analytics services in order to provide better solutions for the customer needs. But the big visible acquisitions, I understand they're very nice, and some of the peers go after them, but it's not our philosophy to go after this kind of acquisitions.
Not something you're interested in. Can I ask you a question about the UK market, Mario, an opportunity there? The UK government announced a tax rise and some changes around social care, looking after the elderly and other vulnerable people in society today. The government, this week, sorry, the government also indicated there's a role for the private sector here, a role for private insurance. Are you familiar with this? Have you been talking to the government around this topic?
I haven't been talking to the government lately myself, but we're very familiar with the UK market. We're a big player in UK, highly committed. We are, dealing with British business and British customers in UK. We don't have European head offices. We just have a British business. We have been growing very nicely last year and this year with SMEs, with mid-market customers, and even with individuals, and we're highly committed to continue growing in the British market.
Committed to growing in the British market. Do you see opportunities for the business, though, around social care, around ensuring people's care in later life in the UK market?
We do, and we're also very committed to develop health and accident services to individuals all across Europe, and I would say all across the world. And we believe that the offer that we're building is very innovative and very interesting for the customers, and we'd love to see a growth and development also in the UK.
Okay, Mario Greco, Zurich Insurance Group CEO, thank you for joining us. Congratulations on that new Zurich headquarters. Okay, coming up, an energy supply crunch sends European prices soaring. We're going to dig into the details and the challenges it presents for the continent. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Last night we were at a dinner at a restaurant, and as we were walking out, a man walked over to me and said, "Thank you very much, you paid for my daughter to go to college." And basically I get that all the time. It's the most unbelievable thing. That's my job.
America heard the news as it was going to work, going to school, or just waking up.
An airplane has crashed into the World Trade Center. That is a live shot
17 minutes after the first plane hit the World Trade Center's North Tower, a second plane hit the South Tower. President Bush was in Florida visiting an elementary school. His chief of staff leaned over and whispered, "America is under attack." A third plane crashed into the Pentagon. A fourth plane appeared to be heading to Washington, but it crashed in Pennsylvania after passengers and crew tried to regain control from the hijackers. By then, the FAA had taken an unprecedented step. Every airline in U.S. airspace was ordered to land at the nearest airport. 3 days later, President Bush went to Ground Zero. What became known as the global war on terrorism was about to begin.
I can hear you, the rest of the world hears you, and the people who knocked these buildings down will hear all of us soon.
Wall Street never opened on 9/11. The open was delayed after the first plane struck and then canceled after the second plane crashed. Markets wouldn't open until the following Monday. It was the longest shutdown since the Great Depression. Once trading resumed, there was a massive sell-off, the biggest one-day loss in the history of the New York Stock Exchange. The Dow Jones Industrials were down 14%, but by early October, stocks were back up to where they'd been the day before the attacks. Almost an entire generation has grown up since 9/11. On this 20th anniversary, many will join those who can never forget that day and remember the nearly 3,000 people who were lost.
Tomorrow is the 20th anniversary of the 9/11 terrorist attacks. We'll bring you full coverage of the commemorations that are taking place in New York and elsewhere throughout the day. The lives of the families who lost loved ones that day were changed forever. We spoke to several of them in today's Big Take story. You can read that on the terminal or at Bloomberg.com. Let's get back to today's business news agenda then and get a business flash. Here's Laura.
Thanks, Anna. The world's #1 car maker is cutting its production outlook. Toyota will make 9 million units over the fiscal year to March, 300,000 fewer cars than planned. It says the spread of the coronavirus in Southeast Asia is to blame. China has made an unprecedented intervention in the global oil market, releasing crude from its strategic reserve for the first time with the explicit aim of lowering prices. The announcement comes amid surging energy costs in China for coal and natural gas as well as oil. Goldman Sachs is dropping social distancing rules in its London office and returning to full occupancy starting next week. An internal memo seen by Bloomberg says about half of the bank's London workers are already in the office each day. It will retain mask wearing in common areas and a mandatory testing program. Free food is also going, which Goldman says will support local restaurants. That's the Bloomberg Business Flash. Tom, Anna.
Laura, thank you very much indeed. Okay, Europe is facing an energy crunch that sent prices for gas, electricity and carbon surging across the continent. Ireland is now warning of a power shortfall that could lead to blackouts. Meanwhile, the cost of power has broken records in Spain, Germany and France. Joining us is our energy reporter, Rachel Morrison. Rachel, then, what is the situation with energy prices in Europe right now? What is driving the pickup, the strength that we've seen in these prices and the impact?
Morning. Yes, as you said, we're having a wild ride on energy markets at the moment. Each day, a new record seems to be broken. What's really driving it is a shortage of natural gas. We don't have enough in storage ahead of winter, and there's prices are so high that people aren't replenishing storage as quickly as they normally would at this time of year, and that's following through into all the other markets, into electricity, into carbon, and coal as well is being pushed up.
And not replenishing commodity, Rachel, not replenishing storage sounds dangerous for the winter. What are the chances that we head into shortages over the winter?
That's something that people are starting to talk about. If we can't get storage levels back up and prices continue to rise, we could see shortages. There's outages in the North Sea. One development is that the Nord Stream 2 gas pipeline is going to start up, and it remains to be seen how much gas flows through that and when, but that should ease some pressure on markets. But at the moment, that hasn't fed through into prices. We're still seeing very, very high prices.
Okay, and that pressure on prices, that pressure on markets, pressure on politics as well, and the politicians. Should we expect a response from Brussels and elsewhere?
That's really the next step, because obviously this has an impact on bills, on consumers, on households. So we are waiting to see if we're going to see any response from governments. The European Commission so far has tried to sort of calm things down a little bit, but we haven't seen much. And with Citibank saying that it could mean a 20% increase on bills, you might expect to see governments start to try to calm things down a bit.
Rachel, thanks very much. Thanks for joining us. Our energy reporter, Rachel Morrison, with the latest on European gas markets. Coming up here on this programme, the ECB's Christine Lagarde says the lady isn't tapering despite announcing a slowdown of bond buying. A recalibration was the word of the day. Market Live's Ven Ram joins us next to discuss. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
The rebound phase in the recovery of the euro area economy is increasingly advanced. Inflation increased to 3% in August. We expect inflation to rise further this autumn, but to decline next year. The new staff projections foresee annual inflation at 2.2% in 21. We see the risks to the economic outlook as broadly balanced. The lady isn't tapering, because what we are doing is recalibrating PEP.
ECB President Christine Lagarde talking about the recalibration, of course, after yesterday's policy announcement. 52 minutes into the European trading day, still holding on to the gains across the European markets, up 0.2%. Joining us now is Ven Ram from our M Live team. Ven Ram, how do you assess the market reaction to this? If this wasn't a taper, if this was a taper, it was a dovish one, seems to be what is filtering through these markets. Is that expected to be sustained, do you think?
Your assessment is spot on, Tom. That's exactly
the market has taken it. And I think that this is sustainable, definitely, in going into the December meeting when they are supposed to unveil their broader plan for the exit from PEP. I take it that for the moderately lower pace of the ECB to mean something in a range of 67 to 70 billion a month, compared with 80 billion in the second quarter. It's still a lot of accommodation and plenty of money to support the markets. So I think that this will definitely be supportive of the markets for now.
Supportive of the markets for now. Let's think about where we are on global stocks as well, or US stocks. We're coming off, well, we've seen the longest losing streak on the S&P since June. That sounds very dramatic, but maybe the size of those losses not quite as dramatic as that makes it sound, Ven. What caused that, and do you think we recover our poise, recover our upward momentum through September?
Absolutely, Anna. We have fallen nearly, 1% or so far this week, and you're going to get increasingly nervous given U.S. stocks are the priciest they've ever been in history in terms of economic output, and that's even more so than they were during the dot-com bubble. However, what stocks need for valuations to get more reasonable is gravity, and the gravitational pull that we are looking for, and that's been elusive, is higher interest rates. And we know that that's not happening in the U.S. anytime soon. So stocks will try to push higher and higher, though there may be sudden bursts of volatility occasionally because of how lofty valuations are.
Ben, how are you seeing then investors hedging for that volatility?
Well, I mean, I think that, you want to be, the investors who are long duration, basically you're using swaptions and swaptions and interest rate options to make sure that they are hedged against. It's a portfolio hedge, and it's given that the Fed is not going to be raising interest rates anytime soon. I think that those hedges, those short-term hedges, are what they need, and that's what I believe is in vogue at the moment.
And thinking about where we head next week, Ven, what's looming large on your agenda?
Well, we are going to be treading water for a bit now, because I think we are going into the quiet period before the Fed meeting on September 22nd. And we already know because of the weak non-farm payrolls that we had for August, I don't think the Fed is going to say anything about taper than what Powell said in his Jackson Hole address. So I don't think they're going to unveil a timetable for taper in September. That is more likely to happen in October. So we are going to get a lot more dovish talk for the time being.
Okay, the doves rule for the time being. Ven, thanks so much. Thanks for joining us. Have a good weekend. Ven Ram from our Markets Live team. Tom, a number of factors seem to be driving European equity markets to recover a little bit in today's session, and global markets. And maybe one of them, in terms of just market sentiment, is this call that took place between Presidents Biden and Xi. But no progress came out of it. Yes, they talked. Maybe that's enough for markets.
Maybe it is. I mean, they talked for 90 minutes, and this was the second call between the two leaders of the two biggest economies on the planet. So we shouldn't, of course, dismiss it. But you're right. We didn't get any real substance from this. I think you can look at it one way. One way is that, look, this is positive, they're talking. The other is that it underscores, because the reason that President Biden picked up the phone to Xi Jinping is because he's frustrated that his officials have not been making progress on areas like climate change, where the US, of course, and others have suggested you can work together on this issue. It's not happening. China's not giving any ground on that. In fact, China wants its own demands from the US.
Yes, and you wonder, what is Xi's price for engaging with the United States on climate change, and what would Biden give him? There is some talk in markets, I know, about whether we will at any point see movement on tariffs that have been in place for a while. So we'll see if that returns to the agenda as we go into next week. That is it for the European Market Open. Surveillance Early Edition is up next. European equity markets then are moving to the upside. We do have modest gains across European stock markets. US futures this Friday morning also pointing higher, up by 3 to 0.5% on US indexes. This is Bloomberg.
ask about your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What's happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
Favorable financing conditions can be maintained with a moderately lower pace of net asset purchases.
We've seen strong economic growth. However, challenges abound.
Inflation may remain higher for longer than we currently anticipate.
This is Bloomberg Surveillance, Early Edition with Francine Lacroix.
Well, good morning and welcome to Bloomberg Surveillance, Early Edition. I'm President Xi and Biden. It's just given a little bit of a lift to the mood overall. The UK about taxes, we've been talking about it all week. We have some polling also for Boris Johnson, so we'll see whether it changes anything here in the UK. The FTSE MIB is unchanged. The CAC 40 saying that actually they will not start an austerity plan and they're not going to move anything when it comes to some of the Treasury. So if you look at technology, basic resource and retail, that's definitely the biggest gainers, and it's telecoms, utilities and healthcare that are under pressure. Overall, global stocks still remaining very slightly close to some of these record highs. Now, the ECB lowering the pace of its bond purchases at yesterday's meeting. President Christine Lagarde was insistent that it was not a taper.
The rebound phase in the recovery of the euro area economy is increasingly advanced. Inflation increased to 3% in August. We expect inflation to rise further this autumn, but to decline next year. The new staff projections foresee annual inflation at 2.2% in 21. We see the risks to the economic outlook as broadly balanced. The lady isn't tapering, because what we are doing is recalibrating PEP.
I have to say, the newsroom, and actually I know I was on a couple of chat with traders, everyone was in uproar about that Thatcher reference at the end there by Christine Lagarde. Joining us to talk about what we heard from the ECB taper and of course what it means for currencies is Elsa Lignos, Global Head of FX Strategy at RBC Capital Markets. Elsa, as always, thank you so much for joining us. Has your euro-dollar call moved at all?
No, not at all. It's not just our call that hasn't moved. I think spot euro dollar barely moved as well if you compare pre-ECB to post-ECB. And I think just the net message we take from all of this is our vol traders who love to sell vol are still in the right camp.
When you look at some of the hawkish messages that we saw from certain, ECB members, from certain members also of the FOMC over in the US, when will they get there? When can we actually start talking about tapering, Elsa?
Well, I think the challenge at the moment is that you're in this situation with a temporary, or what many people think is a temporary uptick in inflation, which is then expected to come back down. And if you think about the long and variable lags over which monetary policy acts, Jay Powell said that himself at Jackson Hole, it would be more of a mistake to kind of tighten at the wrong point in the cycle and then find that you have too tight policy at the moment when you don't need it. And I think for now, the Doves are certainly going to win that battle, because if you look on a policy relevant horizon, that kind of 2-year sweet spot, you don't have inflation picking up well above forecasts.
So, Elsa, overall, is there a point where actually too much stimulus or too much accommodation becomes harmful? Or do you think that really, as you beautifully explained, the risks are on the other side right now?
Well, I think it depends whose viewpoint you're taking. And certainly a lot of people in the market say, well, the Fed or the ECB, many central banks are focused on inequality and income inequality, but there's also wealth inequality. There's other ways that you can see the stimulus expressing itself in financial markets. But as long as policymakers are intent on delivering the stimulus until they see inflation picking up materially, this is not a normative debate. We have to follow what they're telling us they're going to do. And what they're telling us at the moment is very clearly, we're not going to raise rates, tighten policy, remove stimulus until we have material inflation.
Elsa, could you actually see dollar renminbi going lower, because the fact that President Xi and President Biden spoke on the phone for 90 minutes means that we could see a reset also of global relations?
I think a reset might be taking it a step too far. It's always hard to judge the content of these phone calls, but just based on the readouts, it doesn't sound like any material progress was made. I think it's certainly a positive sign that both leaders want to be seen to be engaging, but there are some very fundamental differences that remain. And so I wouldn't get too excited that we're going to see a complete turnaround in US-Chinese relations.
So how much do you actually look at renminbi compared to someone else? If you were, Elsa, to give me your biggest conviction in the FX space, what is it?
So the renminbi, we are looking for a slight grind higher. Our Asia strategist has had that call for a while and continues to stand by that view. But it's not the most exciting currency pair out there. I think at the moment, just given the environment we're in with a lot of central bank accommodation, we still really like some carry trades, but not the ones I think most would focus on, the kind of short dollar, long EM. We've liked short Aussie Mex, for example, for the whole of this year, and it's a trade I still really like. It picks up around 5% carry, and in this low vol environment, that's no bad thing.
Elsa, I mean, we had quite a lot of news on the UK, first of all, about travel, COVID, but the biggest story is about tax increasing here. Does it change your call on sterling at all?
I do think it's a little challenging for sterling, because I think if you remember earlier this year when we got the budget, there was a lot of stimulus and maintaining fiscal support and very little in the way of paying it for it. And if you look at the UK's imbalances, the large current account deficit and the sizable budget deficit, it is something that needs to be addressed. And therefore, I do think going forward, fiscal policy will have to be that little bit tighter, and therefore monetary policy as a result probably won't be able to tighten as much as some would hope.
Elsa, thank you so much. Elsa Lignos, Global Head of FX Strategy at RBC Capital Markets, joining us today. Now let's get more on today's market moves with our Ritika Gupta. So Ritika, what's the Friday trade starting to look like now?
Yeah, Francine, it seems like we have a broadly overall positive sentiment, and you can see that stock 600 up some 0.2%. And also we're seeing that in the US, minis up some 0.4%. That's after we've had 4 down days for the S&P 500. Then I want to quickly look at treasuries. We sit at 132 on that 10-year. We've had pretty steady yields this week, and we've also had some pretty strong auctions as well, showing that demand remains robust for those treasuries. And then I want to take a look at our industrial metals, the likes of copper up some 1.6%, joining the likes of aluminum, steel, and what's shaping up to be a broadly positive day for commodities as well, Francine.
So, Ritika, we also had some pretty bearish calls overnight from Deutsche Bank and Bank of America.
Yeah, Deutsche Bank joining the likes of its peers, Goldman Sachs, Citigroup, Morgan Stanley, all sounding the alarm about US equities. They're now saying that they see a risk of a hard equity correction here. The combination of what's been extreme valuations, but also what they're saying is a rapidly advancing earnings cycle. So they're saying that those two together could pose a big risk. And we also had Bank of America's Savita Subramaniam on, and she was talking about her raised call for the S&P 500 to 4250 from 3800 for this year. But this seems like a far cry away from capitulation, though, particularly when you look at her call for next year, which seems just gains of 2%. So let's take a listen to what she had to say.
The S&P 500 has essentially turned into a 36-year zero coupon bond. If you look at the duration of the market today, it's basically longer duration than it's ever been. So what that means is that any move higher in the cost of capital, be it interest rates, credit spreads, equity risk premia, that's basically going to be a huge knock on the market relative to the sensitivity we've seen in the past.
So Savita Subramaniam there saying that the market, well, it remains vulnerable, particularly to any rise in interest rates or a widening of those credit spreads. And she said the earnings expectations beat for this year, but those could come under pressure next year with that rising inflation and also any supply chain disruptions. Francine.
Ritika, thanks so much. Our reporter there, Ritika Gupta, looking at some of the market moves. Now, stay with Surveillance. Early edition this hour, we'll discuss banking regulation with the Swedish banking minister, and then we'll speak to the winner of the Bold Future Award for British female entrepreneurs. That's Sharmadian Reid. But next, we talk green with the chief executive of carbon accounting firm Normative, Christian Ron. If you have any questions for our guests, just IB plus TV Go. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition, and I'm Francine Lacqua here in London. Now, the crucial climate conference of COP26 is just over 50 days away. Leaders are wrangling over climate commitments in an attempt to one-up the Paris Accord and agree to limit global warming to just 1.5 degrees. But while nations and large companies are critical in reaching net zero goals, getting small businesses on board will be just as important. Enter Normative. It's the software platform behind the SME Climate Commitment, which aims to help smaller companies track and account for their carbon emissions. Now, it has just received a €1 million grant through the Google Impact Challenge on Climate, with a goal to make their technology as accessible as possible. Well, joining us now is Christian Rohn, founder and chief executive of Normative. So Christian, thanks so much for joining us. I mean, I think the first question is that when I speak to a lot of chief executives from small and medium-sized enterprises, they say, I want to do good, I want to do well, but actually it's just pricey for me and expensive. So is it that is the barrier that it's difficult to measure these emissions, or actually that small and medium-sized enterprises are reluctant to do it?
That's an excellent question, and thanks a lot for having me on the show. So I think it's mainly a barrier. I mean, you have 400 million small businesses around the planet that is struggling with the reality of climate change. But in order to go towards net zero, you first need to be able to track your emissions, because in the end, what gets measured gets managed. And the particularly hard part to account for is the indirect emissions from your suppliers and the supply chain, which typically accounts for over 90% of the total emissions. So our mission at Normative is to democratize carbon accounting by making it super easy to account for your emissions for every single invoice and every single transaction throughout the supply chain, regardless of the size of your business.
Right. So, Christian, how do you do that? Is it actually an approximation? I know we've all used, calorie counting apps or whatever you eat apps. Is it that kind of idea, but to understand how much you're polluting or how much you're emitting and your suppliers are?
Again, great question. So the starting point is always an approximation. So what we do is that our clients, they upload data from their open banking or accounting system, all of the invoices. And based on that, we can see how much have they spent on electricity or fuel for their cars or certain raw materials. And based on that, we approximate the emissions of all of those activities. And I think the important thing here is that we give them a highlight of what should you prioritize. I mean, which are your biggest hotspots and what are the actions that you can take in order to go towards net zero? And then you can, of course, improve on your emissions calculations as you go along.
So, Christian, how many people use, Normative, and how many people you think are not using it, companies, because then they think it's expensive to then adjust it? I mean, if you see a problem, then you have to do something about it.
Yeah, I think, again, excellent point. I think the important part here is that it's actually not expensive to take climate action. I mean, the cost of solar is now lower than fossil fuels, and in general, the cost of sustainable energy. So the cost is usually not the issue. It is the tracking and the accounting, which is the hard part. And today we have a few hundred companies that are using the software, but through our collaboration with the UK government and the SME Climate Hub, which is a part of the Race to Zero, we have thousands of companies signing up for a net zero commitment. And that is why we're super excited about the support that we get from Google.org and the fellowship program. So they will in fact send us some of their brightest engineers to offer our software platform for free for anyone that signs up through the Race to Zero campaign and take a net zero commitment.
Christian, how much more, though, does it have to be mandatory? How much more do we need to do to make sure that there's a real difference? There's a lot of companies worried about greenwashing. There's a lot of companies saying, look, the way we count it is just not the right way in how it gets into the real economy. So what do you need to make a real difference?
Yeah, I think what we need in the end is first, pension funds and large financial institutions need to start to demand carbon accounting as a part of their due diligence processes. And this is already happening in Europe through the Sustainable Disclosure Regulation. Then secondly, it needs to be easy to account for your emissions. And you need to have comparable emissions numbers between legal entities. And that is why, encoding the accounting principles into software is so incredibly important.
Thank you so much for joining us, Christian Ron, there, Normative Chief Executive of. I have a feeling we'll interview you again. We'll have plenty more, of course, on ESG, on reporting, especially after the probe and the pressure we see on a lot of the asset managers. Right. Just seconds ago, we had breaking news out of China. This is on the back also of that 90-minute telephone call between Presidents Biden and Xi. That was late last night. Now, Chinese regulators, we understand, are meeting 10 platform companies over labor issues. Now, these are Meituan, Didi, Alibaba, Tencent. We understand they are among the companies that have met with regulators. Regulators ask those companies to protect gig economy workers. Again, it goes back to some of the disorderly capital news that we heard from China. So China trying to clean up the act, saying, look, it's not all about profits. You also have to treat your workers in the right way. So we'll have a full roundup of any China news. Stay with Surveillance Early Edition this hour. We'll also discuss banking regulation with the Swedish banking minister. We'll speak to the winner of the Bold Future Award for British female entrepreneurs, Sharmadine Reid. If you have any questions for any of our guests, please just IB plus TV Go. This is Bloomberg.
Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kayleigh Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance Early Edition, weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's take a look at some of the things that you need to watch out for today. At 11:30 a.m. UK time, the Bank of Russia announces its rate decision, which will be followed by trade and GDP figures. Then, 1:30 p.m. UK time, the latest Canadian unemployment figures will be released. At 1:30 p.m., we'll have data from the U.S., including wholesale inventories and PPI. And then a little bit later, EU economic and financial affairs ministers gather in Slovenia for an informal meeting, and that could move the markets. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine, and happy Friday. Fed Presidents Robert Kaplan and Eric Rosengren say they are selling all their stock holdings by the end of the month amid ethical concerns about their trading activity. The Dallas and Boston Fed presidents released near identical statements after their financial disclosures showed investments in stocks and other financial instruments. Both said they will invest the proceeds in diversified index funds or in cash. UK wholesale electricity prices surged £2.3 thousand a megawatt hour for a period earlier this week as Europe continues to face an energy crunch. The peak was more than 10 times the price seen the following morning, highlighting the current extreme volatility in the market. Low winds, along with the lack of natural gas supply across the continent, are making the situation worse, with record prices seen in Spain, Germany and France. And North Korean leader Kim Jong-un has shown off a thinner frame, a trace of a tan and even a new haircut as he inspected a military parade. No major new weapons were on display, with Homeland Security a greater focus at the country's first military parade since US President Joe Biden did take office. But the new look Kim is indeed drawing attention after his noticeable weight loss over the past few months. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, I have to admit, yesterday, so that headline across the Bloomberg terminal actually saying Kim Jong-un is trim tanned and loving the parade. And of course, everyone rushed to see exactly what all the fuss was about. There is, and I know there's been like some also, psychological experts, given his body language, because it's such a mysterious country, it's very difficult to know what he does next. So I think, foreign affairs experts are saying if he looks more relaxed, maybe things will de-escalate.
Well, Francine, he did show off a new haircut, which was representative of his grandfather's haircut. And as we have seen, we don't know a lot about the regime, but we'll keep our eye on it.
Yeah, and he was smiling. Stay with Surveillance Early Edition.
crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Joe Biden urges President Xi to cooperate on key issues in an attempt to revive bilateral ties, even as the presidents of the two richest nations spar on trade, human rights, and Hong Kong. The ECB slows the pace of bond buying, but Christine Lagarde insists it isn't a move to wind down emergency stimulus. And coming up, we speak to the winner of the Bold Future Award for British female entrepreneurs, Sharmadine Reid, and we discuss banking regulation with the Swedish banking minister, Asa Lindhagen. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Joe Biden has called Chinese leader Xi Jinping over his frustration with dead-end talks between the countries. The call was the second between the two leaders and comes at a time of increased tension in their relationship. Biden hoped that the more personal engagement with Xi would help advance cooperation on both sides. Well, here to discuss all of this is Bloomberg's international government reporter, actually editor, Roz Matheson. Roz, always great to speak to you. Thanks so much for joining us. So what does this actually tell us about ties between Biden and Xi?
Well, the optics of the call are quite interesting. It was a 90-minute call and their first one since February, and it was initiated by the US president, who clearly, as you say, is growing frustrated at the lack of progress in ties. But the sense from the readouts is that Xi Jinping wasn't exactly warm on the call. They may have had an open chat, but it doesn't seem that Biden got whatever momentum he was seeking, and rather Xi Jinping is pushing everything together, saying you cannot separate trade, human rights, and issues like Hong Kong. And at the same time, Xi is very focused on domestic matters in the run-up to a big leadership meeting in China in the early part of next year, and on his campaign to ensure a greater distribution of wealth, what he calls common prosperity. And he doesn't seem all that interested as a result in offshore matters. So from where he sits, he's probably happy just to let things with the US stay as they are for now. So not any worse, but also not any better either.
Yeah. So, Roz, does this pave the way for a meeting at the G20?
Well, usually you would get the China side pushing for a meeting at a big summit like that. It's a chance for Xi to be met on an equal footing, to be recognised as a senior leader, and so on, and to use those one-on-one moments to sort out things like trade. He's done that quite well, for example, with the former president, Donald Trump. But again, there's no great sense that China's pushing for the same at the Rome G20 or at the COP26 climate meeting either. In fact, there's not even clarity on whether Xi will show up in person. He's not left China now for 600 days during the pandemic. He's attended everything virtually. And what we're hearing at the moment is that the G20 hosts, Italy, are in fact growing a bit worried that he may not even show up. So if Biden thought the G20 was the chance to finally spend some time in person, it's very unclear that that would even happen.
Roz, thank you so much. Rosalind Matheson there, of course, who oversees all of our coverage of international government. Meanwhile, Joe Biden announced new measures requiring federal workers and millions of healthcare workers to be vaccinated against the virus. Now, those who don't comply could be dismissed and private employers could actually be fined. Here's what he said.
The Department of Labor is developing an emergency rule to require all employers with 100 or more employees that together employ over 80 million workers to ensure their workforces are fully vaccinated or show a negative test at least once a week. Some of the biggest companies are already requiring this. United Airlines, Disney, Tyson's Food, and even Fox News. This is not about freedom or personal choice. It's about protecting yourself and those around you.
Well, that was President Biden, and of course, this is just one of the main challenges that governments around the world face to make sure that there's not pockets of unvaccinated citizens that then spread and get sick with COVID-19. Now, let's also turn to green finance, and new EU sustainable finance rules could raise compliance risks for fund managers especially in light of the greenwashing probes into sustainability disclosures by DWS. Well, we're very pleased to welcome Sweden's Minister for Financial Markets, Åsa Lindhagen, to talk about all of this. Minister, thank you so much for making the time to come on Bloomberg. I mean, this is probably one of the most important conversations of our time. What do some of these probes tell us? Have you had conversations with your banks, with other banks around the world, in saying they want to make sure what they have in their books so that they're not greenwashing?
Well, of course, this is, one of our biggest challenges that we're facing now around the world, and in Sweden and in all countries in the world. It is the climate crisis, and I think that more and more people are getting aware of what huge crisis this is, and that we need to act. So, of course, the financial sector has a crucial role to play in the green transition. I mean, we need to direct capital towards activities that are sustainable, and we need to manage this crisis because it's, it could damage the possibilities for mankind to live on this planet. So, of course, that is very important to discuss, for example, greenwashing.
So, Minister, is existing legislation in the EU, including SFDR, actually enough to stop greenwashing amongst financial actors?
I do think we need to do many things, and right now we have the EU taxonomy, which is a work being done by the EU Commission to define what is sustainability. I mean, a huge challenge these days is that we have different definitions of what is sustainable, and we need to have common definitions in order to increase transparency and make it easier for investors to make informed decisions. If I want to invest in green activities, what is green activity? So I think the EU taxonomy is very, very important in the future. Will play a crucial role if we manage to have it in place and get it working in a good way.
So, Minister, do you think that actually regulators need to take a more active role in this?
Yes, I do. I definitely think that we all need to take more action, and that includes, of course, also politicians. We need to be braver, we need to work faster, and also, of course, the actors in the financial sector need to ask themselves, what can we do to contribute to the green transition? And this is also a matter of handling climate-related risks. I mean, climate risks are financial risks, so if you don't deal with these risks, it is a huge risk for your business. It's a huge risk of doing investments that will end up to be, worthless if it in the worst case scenario. So that is also important to be increase the capacity in the financial sector to deal with the climate-related risks.
But so, Minister, I mean, there's the IPCC report saying that actually the planet is warming a lot faster than we think it is. So how crucial and how urgent is it for the EU, for example, to get financial actors and industries to stop allowing capital to get to corners where actually this is enabled, that it's delaying the shift away from carbon?
It's extremely urgent, and I think the last IPCC report is very, very clear on that. We need to stop also invest in new fossil energy, and we need to do this transition. Otherwise, we face great risks all over the planet, and everyone needs to take responsibility in this shift.
Will you impose tougher rules in Sweden if you think that the EU is a little bit behind the curve on this?
Well, I do think we need to take more steps from the political side. And one thing we have also in place right nowadays is the disclosure regulation in the European Union that, it's now the asset manager need to report on their how sustainable the investment is, so that investors can make more informed decisions on sustainability. And we have already had that kind of regulation in Sweden before the European Union. So I think we need to continue to be ahead of progress and show other countries that it is possible with the green transition, and also, of course, learn from other countries that take important steps forward. I mean, this is it's not a time to wait and see. This is a time for action for all of us.
Minister, thank you so much. Sweden's Minister for Financial Markets, Asa Lindhagen there. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. Up next, we speak to this year's winner of the Bold Future Award for British female entrepreneurs, Sharmadean Reid. She's the founder of the Stack World, a networking and content platform for women. Now, if you have any questions for her, just IB plus TV Go. This is Bloomberg.
Welcome to El Zonte, known as Bitcoin Beach. This little surf town on the coast of El Salvador is one of the first to go full crypto. Yep, you heard that right. Everything from groceries to coffee to salaries and community projects can be paid for using Bitcoin.
It's actually been crazy how fast it has caught on and how useful Bitcoin's been for, everyday people.
Just to buy something as simple as a cup of coffee can be done quickly, painlessly.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The world's #1 car maker is cutting its production outlook. Toyota will make 9 million units over the fiscal year to March, 300,000 fewer cars than actually planned. It says the spread of the coronavirus in Southeast Asia is to blame. Now, Amazon says it will pay college tuition for some frontline employees in the US. The company will spend an extra $1.2 billion by 2025 on the package, including for the first time paying the complete costs of college tuition. And Amazon is the latest big employer to offer educational perks to attract workers in a tight labor market. And Goldman Sachs is dropping social distancing rules in its London office and returning to full occupancy starting next week. An internal memo seen by Bloomberg says about half of the bank's London workers are already in the office each day. It will retain mask wearing in common areas and mandatory testing. Free food is also going, which Goldman says will support local restaurants. And that's your Bloomberg Business Flash. Francie, no more free food for Goldman workers.
I know. I mean, the story has everyone up in arms. There are bigger stories out there, but I know it's definitely getting a lot of the finance experts talking, especially some of the employees, only the employees. Leanne, thank you so much. Now, our next guest is this year's winner of the Bold Future Award, honoring the best of female entrepreneurship in Britain. Sharmadean Reid is the chief executive and founder of the Stack World. The Stack World is a networking platform for women that launched this year and has raised more than £3 million in funding. Well, Sharmadean previously founded the London nail bar Wa Nails and Beauty Stack, a beauty professionals network. Well, we are delighted to have Sharmadean Reid, chief executive and founder of the Stack World, joining us today. Sharmadean, first of all, congratulations.
Thank you so much.
And you made it nice and early in the studio the next day, so that's even better. Sharmadean, you have an amazing journey, and actually, this kind of was recognized last night with this award. When you started building your businesses, what was the toughest thing about it? Was it funding? Was it getting support? Was it breaking through?
I would say that for women in general, getting started is not often the hardest part, right? It's like we've had the last decade of female entrepreneurship being a buzzword, boss culture being a buzzword. I actually think the hardest part is scaling. I think that women often get their foot in the door these days through amazing networks and opportunities, but do they have the mentorship or sponsorship or advocacy to essentially take their business to the next level? So what I mean by that is, how many women do you read about raising Series A, Series B, Series C, or even IPOing? It's a rarity, So that's the challenge.
But this is what, lack of mentors, or how do you explain that?
I would say that it's definitely being out of a club of access to knowledge and network. So I would say, in my experience, I found selling the vision really easy, selling the mission really easy. But then when it comes to hiring the best employees, how many male engineers might want to work for a female founder, or even knowing the path to raising your next funding. It's something you kind of have to prepare a year before. So I would say it's definitely been part of the networks of power. To me, I think women are still locked out of them despite rising stats.
So do you think that's changing, though, slowly? I mean, it's kind of glacial pace.
That's the thing. People love celebrating, 30% of board members now are women, but it's still not 50%. So it's like, okay, cool, celebrate one, but how are we going to get there faster? So things are changing, but I think there's all of these tiny little unspoken ways that women are held back that aren't actually, in a handbook, for example.
Talk to me about the Stack World.
Sure. So the Stack World, we launched it earlier this year. We're on track for 10,000 paying members, which is great. It's been growing about 28% month on month. It's really exciting. And it comes from around 15 years of me working with women, seeing what stops them getting. And to me, it was that knowledge, as I said earlier. So we provide editorial content on women role models, how to get your first 10,000 customers, etc. The second part is the network. So we connect all of our readers together digitally. And then the final part is the commerce. So imagine, women buying and selling from each other, whether it's professional services, like I need a lawyer or I need a mortgage broker. Property is a hot topic for our audience right now. So I'm like knowledge, network, commerce, all digitally, but also lots of face-to-face meetups these days. And my goal is to essentially create a global network of women trading with other women.
How big do you want it to be? And actually, you said the one thing that maybe holds women back is not having the support or, the Series A, B, and C. This is, in general, more of a problem of European founders, also in European companies compared to the US.
Yeah, it's true. I would say I want it to be as big as it can be. We're half the population, right? So half the world. No, I think for me, I'll be really satisfied if we have a global audience, a global network of, millions that are all bought into the Stack World mission. It's essentially a new alumni.
What do you need now to be bigger? Is it funding?
So we are fundraising right now, which is really exciting, and it's moving very fast. But it's not just for me, the cash, and I think that anyone who is involved in venture capital or private equity should think, not only can I support female entrepreneurship and equality with money, but how can I open doors for these female entrepreneurs? So who can I introduce them to? How can I coach them on deal making? How can I help them with their commercials. Do you know what I mean? So I think like that is the way that you help women get to this next stage in their career.
And I mean, is there a question that they always ask you? Is there a question? What's the number one question that you get over and over?
Is there a big enough market? I always get that. In fact, it's not just me. Many of my female founders, I'm part of many like female founder groups, that question gets asked over and over again. I'm not sure it's a big enough market. But again, half the citizenship of the world. So it's pretty big.
Sharmadean, thank you so much
Thank
for
you
joining
so
us.
much.
Sharmadean Reid there, Chief Executive and Founder of the Stack World. Now, Ken Mullis says Wall Street's talent war may drive up junior banker pay even further. Up next, we hear from our exclusive interview. This is Bloomberg.
Inflation. So you will have pondered this a great deal. I look at your data. Your inflation is down for 4 months in a row. You're at a 6-month low. Simple question. Is inflation, in your view, now transitory, and have you passed the worst of the spike?
We certainly feel, and we have passed the worst of it all. Our projection is that inflation will continue to go downwards throughout 2021 and also throughout the course of 2022. Our target is that in 2023, we will be moving to single-digit inflation.
Are the supply chains still much impacted in Nigeria, or do you see a relief there?
We see a turn because transport sector in the last quarter GDP report has picked up. And it's moved upwards. Still not in the positive territory, but it's moved up very, very significantly.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, an intense talent war on Wall Street that has forced firms to raise starting pay for junior bankers to north of 6 figures. Among those raising pay for analysts to lure new recruits and prevent defections is Mullis & Co. Its founder, Ken Mullis, tells Bloomberg he's prepared to bump up pay even further next year.
The M&A business has gone, like you said, 20 years ago it was a tactic. You went to the GE board, just to pick a name, and it was a tactic to get a strategic opportunity done, and you may or may not do it. Today it's actually an industry, meaning there are firms that are in the business of doing M&A. They get given money, 25 billion, some of them, 30 billion. I think we'll see a $50 billion fund before the next 5 to 7 years are out. And they want to do transactions. Now, they also delegate down to junior talent like we are. So the biggest checkbook in the world 20 years ago was Jeff Immelt, maybe at GE, and today a 37-year-old at a major PE firm may have a bigger M&A checkbook than the Fortune 10 did 20 years ago.
You think we'll see a $50 billion private equity fund?
Oh, definitely. I mean, people forget that in 2000, when KKR did the big millennial fund, it was like $5 billion, and that was only 20 years ago. I think, and I'm not up to, I think KKR reported that they raised $67 billion in the first quarter. So, look, the acceleration of capital into private equity, the attributes of it, I can't see why it wouldn't happen.
Add leverage, it's firepower of $250 to $300 billion. It's remarkable.
Markets have grown.
Ken, I've always known you as someone who'll go anywhere and talk to anyone if there's business to be had, even if it means getting up in the middle of Thanksgiving dinner to catch a plane. A story we can tell later. What about China? Do you agree with George Soros that doing business in China is no longer morally justifiable because it's tantamount to supporting a totalitarian regime?
No. And the reason I don't agree is not that I have is that I'm a business person. And, you know, there are politicians who make that. I think the amount of business people that are getting involved in these issues because they think there's only one side of an issue. Look, the reason things are issues is because there's two sides to it. China is something that our government should deal with, in that sense. In my world, you know, I try to look at business as business, and I think there's way too much pressure or way too much focus on business trying to get involved in issues. Let me tell you, most of these issues are 55-45 or 60-40. And there's a lot of people who think there's clarity on what side you should be on, and I think that's very dangerous.
Well, that was Ken Moelis talking with Bloomberg's Eric Schatzker about the intense war for talent on Wall Street and investments in China. Now, in the meantime, let's also have a look at what markets are doing. Now, there has been a bit of a wobble over the week overall, but today, global stocks remaining in sight of record levels following the week that, saw a lot of risks coming at the forefront, elevated inflation, slower economic recovery, and less generous monetary policy. The one thing we're looking at very closely is renminbi on the back of some of the things that we heard from China, and of course, that President Biden called that lasted 90 minutes yesterday. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins us out of Berlin. Haley Lyons will be in New York. This is Bloomberg.
会場に行って観戦するということも難しいお子さんがいるんです。このように冷房の効いた香港の体育館の中で、それこそ大会の最前列で観戦ができる、体験ができる、こういうことをとてもありがたいことだなというふうに思っていますし、この技術に感動しています。予想以上に子どもたちの反応が良かったというのはですね、とても校長として嬉しく感じております。この子どもたち、 どれだけオリンピックの心待ちにしていたのかといったことがよくわかるような今日の表情です。
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Last night we were at a dinner at a restaurant, and as we were walking out, a man walked over to me and said, "Thank you very much, you paid for my daughter to go to college." And basically I get that all the time. It's the most unbelievable thing. That's my job.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Favorable financing conditions can be maintained with a moderately lower pace of net asset purchases.
We've seen strong economic growth. However, challenges abound.
Inflation may remain higher for longer than we currently anticipate.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, it's 10 a.m. here in London, 11 a.m. Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, September 10th. Our top stories today. Biden's shot at the unvaccinated. The president orders millions of healthcare workers, government employees, and federal contractors to get the vaccine. Battling with Beijing, President Biden also makes a late-night call to President Xi after months of lower-level talks to improve relations reach a dead end. And sell-off at the central bank. 2 regional Fed presidents promised to get rid of their individual stock holdings in a move to end questions about their trading. So there is quite a lot of stories out there. Also, happy Friday. I know Kaylee, Matt and I have been waiting for Friday for what feels like forever this week. Kaylee, if you look at stocks, they're nearing record highs despite the wobble we had this week on economic growth forecast and inflation.
Yeah, markets in Asia certainly very happy that it is Friday, Francine, because we did see a rebound after yesterday's relatively steep losses. Anywhere you look basically across the region, it was in the green. All major equity benchmarks really in positive territory. You had Japan resuming its rally with the Nikkei up about 1.25%. And in China, the Shanghai Composite actually closed at its highest level since 2015. The rebound in Chinese equities really led by tech stocks. The Hang Seng Tech Index up about 2.8% or so, actually recovering about half of their losses from yesterday. We got some clarification overnight. Apparently, China isn't freezing all new video game approvals. They're just going to slow them down. So that's aiding sentiment. And of course, speaking of sentiment, traders also weighing the conversation that took place over the phone last night between President Biden and Chinese President Xi Jinping. And after news of that phone call, the Chinese yuan is an outperformer in Asian foreign exchange. It's stronger against the dollar by about 0.3%. At the same time, the Japanese yen is actually the only currency in Asia or in G10 weaker against the dollar today to the tune of about 0.2%. Now, here in the U.S., we are coming off of 4 days of losses for the S&P 500, but judging from futures trading, we may break that losing streak today because S&P 500 futures are up a little shy of 0.5%. In the bond market, you are seeing some selling. The 10-year yield up about 3 basis points. We're sitting right around that 132 level. And then I wanted to point to what we're seeing in commodities, both the industrial metals, which are seeing a broad-based rally, copper futures up about 2%, but also oil. Of course, we got the news yesterday that China is releasing oil reserves. That took crude lower, but a rebound taking shape on this Friday morning. WTI up about 1.6%, trading at $69.26 a barrel, Matt.
Yeah, there is so much going on in oil today, Kaylee. I mean, I'm really focused on, it's not just China, intervening, but the U.S. in a sense intervening as well, right? The U.S. releasing more of its strategic reserves to Exxon, now a total of 3 million barrels. The output in the U.S. dropped the most on record after Hurricane Ida, Shell declaring force majeure, and in gas, there's even more news. There's a big gas crunch here in Europe, and Nord Stream 2 is now open for business. The Russians say they've finished it, and the Germans can commence purchases from Moscow whenever they are ready. Take a look at the green on the screen here in Europe. For the most part, we see the Iberian Peninsula not moving very much, but France gaining, and those gains are a little bit more than we see in the UK and in Germany. I want to actually focus in on the Stoxx 50 today rather than the Stoxx 600. It's sort of like the Dow of Europe, and it's really only continental Europe, or only the EU, right? The UK stocks are not in the Euro Stoxx 50, and it's a much stronger gainer as a result, because London isn't showing the kind of gains that we're seeing here on the continent. You can see it's up about 2/3 of 1%. The Bunds right now, -34, -35 basis points, and we saw the euro at 118 and change. Not a lot of movement in European FX or in European rates, even though we all paid attention to Christine Lagarde tell us she's not tapering yesterday. You do see some movement higher in the pound, 138.77, and then I put Brent crude in here just to show you the global benchmark. I mean, Kaylee made a point to show you NYMEX crude. We did see a big dip in those both yesterday, but especially Brent, right, as China intervened, and Brent is also bouncing back at a stronger rate, Fran.
Yeah, Matt, I wonder whether that differential between the UK and, for example, the CAC 40 has to do with taxes. Of course, Emmanuel Macron.
Absolutely.
8 months away from that election. Now, look at what else is ahead today. Russia in focus, with the central bank expected to deliver a 5th straight rate hike as prices continue to run hot. Now, Canada releases its jobs numbers at 8:30 a.m. New York time. It's set to see a slowdown in job creation. Then at 9 a.m. New York time, Cleveland Fed President Loretta Mester speaks virtually at a Bank of Finland conference on monetary policy. Now, over to Washington, where President Biden is ordering federal workers and millions of health care workers to be vaccinated. He's also issuing rules for large private employers to mandate shots or testing. Well, he spoke at the White House yesterday.
The Department of Labor is developing an emergency rule to require all employers with 100 or more employees that together employ over 80 million workers to ensure their workforces are fully vaccinated or show a negative test at least once a week. Some of the biggest companies are already requiring this. United Airlines, Disney, Tyson's Food, and even Fox News. This is not about freedom or personal choice. It's about protecting yourself and those around you.
Let's get straight to Emily Wilkins, a Bloomberg government reporter joining us from Washington. Emily, this is really President Biden stepping up his fight against the Delta variant.
Absolutely, Francine. What we're seeing right here is President Biden really hardening his stance, particularly with federal employees who are now required to get vaccinated. Before that, they could have opted for a test, and really pushing on businesses with more than 100 people, saying that these businesses either need to put in vaccine mandates in place, aggressive testing, or face fines of thousands of dollars from the U.S. Department of Labor. So there's really a big step up here, and it kind of comes as we've hit this point where even though the vaccine is widely available, free, has been for months, you still have a large chunk of American adults who are not taking that vaccine. And that's really holding up certain things, such as the economy coming fully back, things really beginning to open up again as it was post-pandemic. And let's take a wider look at the politics here for a minute. I mean, remember when President Biden began his presidency, it was very much focused on ending COVID-19. It seemed like they were accomplishing that for a while, with an increasing number of Americans getting vaccinated, but we sort of hit this plateau at this point, plus the Delta variant has complicated things.
Yeah.
And this is clearly President Biden's attempt to get the narrative back under control.
Well, President Biden would also like to see his economic agenda pass through Congress, Emily, and we are seeing progress. We had several House committee votes yesterday on pieces of that $3.5 trillion socially oriented spending. What do we know about the composition at this point?
So nothing too surprising about the composition. It's all stuff that we've been discussing for months now, right? Paid family leave, help with childcare, help with elder care, pre-K assistance with the first 2 years of community college, all things that we've widely discussed. Now we're just getting the details of them hammered out, and we're expecting to see more. The tax proposal in particular, the mechanism that will pay for a lot of this bill and raise corporate taxes as well as taxes on wealthy individuals. We're expecting to see text on that in the next couple days and see that be marked up by a committee next week. But we also saw fractions emerging within Democrats as well. We saw moderate Democrats, Stephanie Murphy of Florida, come out and say that they do have some concerns with how quickly the process is moving, the fact that they haven't had time to review some of these proposals, and there could be more individuals like her. This could potentially become another big roadblock for this legislation passing in the House.
Emily, thanks very much. Emily Wilkins there from Bloomberg Government talking to us about what's going on inside the Beltway. Now, the Biden administration is growing more frustrated over talks with China as well. In a phone call last night, President Biden urged China's Xi Jinping to cooperate on key issues, even while the two battle over other topics. Bloomberg's Tom McKenzie joins us for more. So, Tom, what are the key issues and what are the other topics?
Well, the key issues are numerous, Matt, of course, ranging from everything from human rights to trade to technology. But this was an important call, of course, because it's the first time since February that the two leaders have actually set up a call that lasted for 90 minutes. And the reason for this was President Biden and the White House who initiated this call was because they are frustrated over in the US that they haven't been able to make more progress on issues like climate change when John Kerry went over to China just in the last few months. It was that frustration that led to this call. President Biden hoping that a personal relationship with Xi Jinping can move the dials on some issues. China coming out and saying they are in favor of cooperation, but not just on US terms.
So we did have a little bit of a change. I mean, today we also had a little bit more on some of the technology stocks, a little bit of pressure. So how does it all pan out?
Well, certainly in the markets, we saw a bit of relief when it comes to those Chinese tech stocks because there was some moderation around the reporting from the South China Morning Post, which yesterday came out and said there was going to be a ban on online games. They moderated that now, so a bit of relief fitting into those shares, certainly, and that led to that optimism in the Chinese markets today. That's on the tech front. Certainly technology is a key concern for President Xi Jinping, the need to ease some of those restrictions because he's very aware that Chinese companies need access to the hardware and software from the US. It's increasingly been restricted. But trade is another question, and the Chinese have said this a number of times. They want to see tariffs removed. On the trade front, though, you're seeing exports to China, to the US, out of China, at very high levels. Indeed, the surplus is very much back. So far, China is showing no signs they're going to make any concessions in this relationship.
All right, Bloomberg's Tom McKenzie, great roundup. Thank you so much. And turning now to the Fed, because Boston Fed Chief Eric Rosengren and Dallas Fed's Robert Kaplan said they are selling their individual stock holdings. This, of course, is following ethical concerns over their trading activity last year. Let's get more on this with Bloomberg's Ritika Gupta. So, Ritika, technically what they did followed the rules, but people were quite upset about it. Talk to us about the specifics of their investments.
Yeah, okay, Kaylee, there's been calls and outcry for more accountability. This is after it came out that Fed officials had been buying and selling individual stocks and securities during 2020. This was the year when the Fed had been propping up financial markets with some of those emergency measures. And now Fed's Eric Rosengren and Robert Kaplan coming out and saying that they will sell those individual securities by the end of September to try and appease some of these calls for more ethical standards. They said that they will put those funds, those proceeds into index tracking funds or hold them in cash. But many critics just saying, well, it's far too late and that the damage is done. This is as the Fed has been boosting their monetary stimulus and it's deemed really to have been maybe benefiting more those wealthy Americans, rather than the general population. And as to your question on the specifics of their investments, well, Eric Rosengren, for his part, he disclosed that he'd been buying and selling 4 real estate investment trust shares. And this raised some concern and raised some eyebrows because he'd been one of those warning about the commercial real estate market and that it could be overheating. He'd actually been advising the Fed to scale back some of its mortgage-backed security purchases at a quicker rate than treasuries to avoid some of that overheating. As for Robert Kaplan, well, he'd been buying and selling shares of the iShares floating rate bond ETF. Now, this tracks bonds with maturities under 5 years, which we know the Fed can impact those prices and have influence over them through the Fed funds rate. So all in all, critics saying that yes, it was might have been prohibited, but still it's a call of lack of judgment and has really damaged the Fed's reputation. Kaylee.
All right, Bloomberg's Ritika Gupta, thank you so much. And speaking of stocks and who's holding them or not, let's take a look at some stocks moving in pre-market trading here in the U.S. A big mover to the upside is Affirm, of course, the buy now, pay later company. It reported after the bell last night, topped expectations. One analyst over at Truist saying it's very strong and he continues to expect strength. He raised his price target to $120 a share. It's trading at $114 this morning, up about 24% in pre-market trading. Another stock moving to the upside is Zscaler, also a company that reported and beat after the bell last night. It, of course, is a security software company, and its shares are higher by a little more than 2%, nearly 3% in early hours. But one mover to the downside is Apellis Pharmaceuticals. The company said yesterday only one of its late-stage trials for geographic atrophy treatment met its goal, and that stock getting punished for it this morning. Francine, down about 30% before the bell.
Yeah, we'll have plenty more on that. And of course, we'll have plenty more on vaccines, vaccinations, and the jabs. Coming up in the next hour, Luke Kawa, UBS Asset Management Director of Investment Solutions. We'll talk about some of the Deutsche Bank calls, including some banks calling for a correction. This is Bloomberg. After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Now, there is so much going on in the oil patch that we have reached out to MLive to get a commodities expert and join us this morning. I mean, China yesterday intervening in the market by releasing strategic reserves for the first time in history, at the same time as the U.S. is releasing strategic reserves to Exxon for the second time in just a couple of days. Hurricane Ida dropped the input, or the output, I should say, of oil, the most in U.S. history. Shell is declaring a force majeure, and there's a ton going on in gas as well. Here you can see that oil is poised for its first weekly loss in 3 weeks, or, well, it looks like it's doing a little bit better because of today's rebound. But joining us is Eddie Vandervelde of Bloomberg Markets Live to talk about the Texas tea. Eddie, although I watch Brent more closely than WTI, what do you make of all these moves in oil?
Yeah, look, really interesting. I think it is interesting that we're seeing that move from China at the same time as the move from the US, but they are very different in character, right? And the US, it is a response to a short-term, supply crunch. China's stated aim here is to affect prices. And I think they're not particularly successful, and they haven't been in other commodities either. We've seen them do it in copper. The copper price has been steady, but that's more a reflection of delta and of slowing demand for copper than it is for pure, that China is affecting the price. If China releases reserves, ultimately they will have to replenish because they are not a major producer.
So, Eddie, when you look at the price of oil right now and the way it goes and the volatility that we could see, what will it move on?
The price of oil?
Yeah.
The price of oil. I mean, the price of oil now is very vulnerable to me because I think on the one hand we are looking at a delta and a global slowdown, those kind of fears. But on the other, if those fears are overbaked, I think OPEC has signaled that it will pump into rallies. OPEC is comfortable with these kind of prices. They would rather maintain market share or gain greater market share. So I think the oil price, the upside here is capped because of those factors, because OPEC will just pump it to death.
Well, let's talk about the upside possible for the base metals from here, Eddie. You have nickel, aluminum right around record highs. You have the likes of Goldman Sachs and Citigroup raising their targets for it. Do you think this rally can continue?
It's such an interesting question, and I think it's really key for the global inflation picture because for raw materials to keep fueling inflation, and there are other drivers as well, but for raw materials to matter, they can't just be elevated and stay there. They need to continue rallying. And for some of these metals, yes, there are real supply constraints that we are worried about in the short term. But we've already come an awful long way since March last year. I think we are in a very long-term commodity super cycle that will, boost copper prices. But in the medium term and the short term, copper and other metals have gone an awful long way.
Eddie, thank you so much. Eddie Vandervelde there from our Bloomberg Markets Live Tea. Now, coming up, we'll look at dollar, we'll look at dollar dynamics, and we'll have plenty more also on commodities. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees. or so, which is the track that we are currently on.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines in New York with Francine Lacqua in London and Matt Miller in Berlin. Now let's get the first word news. And New Zealand went into lockdown a month ago after discovering one coronavirus case. Today, the government reported 11 new cases in the city of Auckland. That's the lowest number since the first days of the stay-at-home order. Toyota is cutting its production forecast for the fiscal year by 300,000 vehicles, a roughly 3% reduction. The Japanese automaker blames the spread of the coronavirus in Southeast Asia, along with the semiconductor shortage. Last month, Toyota warned that cutbacks were coming. Harvard University has agreed to stop investing in fossil fuels. Instead, the university will use its $42 billion endowment to support the green economy. Harvard students have protested for years, calling for fossil fuel divestment. And BlackRock is rethinking its October return to office plans for U.S. employees. The world's largest asset manager says the spread of the Delta variant calls for a more flexible approach. According to a memo, BlackRock is now telling employees that it hasn't decided when it would like to see them at their desks at least a few days a week. And Matt, this also echoes what we heard from Microsoft yesterday. They were expecting a return to the office on October 4th. They have now delayed that indefinitely, saying it's too hard to set a date with the pandemic so unpredictable.
Yeah, you're going to see, well, we had a great story yesterday on The Big Take about this. Really a mixture of companies that are mandating vaccines, companies that are mandating testing, companies that are bringing workers back into the offices, companies that have decided not to do that. And everything seems very up in the air right now. There's no unifying trend.
We have to wait for some of the booster shots. I mean, it's interesting that overall, so Singapore has one of the highest cases since last year, but they're not going into lockdown. So, you know, companies are being very cautious. Corporates are being very cautious, possibly because they're concerned about getting sued. But then you have countries actually taking more risks if they have a critical level of vaccination. So it's interesting to see the different approach, you know, at the government level and at the corporate level. Now, coming up, we'll talk a lot more about the markets. Luke Kawa, UBS Asset Management Director of Investment Solutions. I loved, Matt, your chart earlier on with some of the things that we need to watch out for oil. It's going to be actually a pretty busy week next week for the markets.
Yeah, a very busy week. And also this weekend, a lot to pay attention to. Do you know MotoGP is back in Aragon and Maverick Vinales is racing for Yamaha now? Or for Aprilia now, excuse me. So it'll be interesting to see how he does. I guess he's going to finish in the bottom 5, but probably ahead of Valentino Rossi.
And football, Matt, don't forget.
Oh yeah, NFL.
This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Matt Miller in Berlin, Kelly Lyons in New York. Matt, as we look at the markets, I know we're looking at more and more banks coming up with putting meat on the bone. Not only, we're worried about valuations, but for example, Deutsche Bank seeing the risk of a hard equity valuation correction.
Yeah, and we're hearing that now from more and more people. Goldman Sachs coming out with the call for the possibility of a drop as well. And of course, you've got some members of the Federal Reserve selling off all their equity holdings. A lot of people are saying, does that signal a top? Maybe that means it's the end. They can start to raise rates now, if you want to be very cynical about it.
We're not cynical. The markets are not cynical, certainly not the bond market, Kelly.
Yeah, well, let's talk about the equity market as well, Francine, because we've had several days of losses in a row, both here in the U.S. and in Europe. But it looks like those losing streaks may snap on this Friday, because right now the Stock 600 is higher by about 0.2%. You have sectors like consumer and basic resources leading the way there. And here in the U.S., S&P 500 futures are right around the highs of the session, up about 0.4%. In the bond market, we are seeing yields tick higher by the better part of 3 basis points, which basically means we're ending the week right where we started at, around 132. And then, of course, we've been paying attention to the commodity complex. China releasing oil reserves. What does the demand picture look like? Right now, oil is rebounding off of the losses we saw yesterday, up about 1.4% on WTI. It's trading at $69.09 a barrel. As for some movers in pre-market trading, Apellis Pharmaceuticals is a big mover to the downside. Disappointing results from one of its trials for geographic atrophy, which is an eye condition. So that stock is down about 30%. But another company working on a treatment for that same condition is getting a boost from its competitors' pain today. It's up about 28% for Iveric Bio. Then two other stocks moving to the upside. Affirm Holdings had a strong quarter after the bell last night. It's up 23%. And then Catapult Holdings, maybe the latest meme stock, because it's up 74% in the last 2 weeks and is looking to add to those gains today, up about 19% before the bell, Francine.
Kaylee, markets may be a risk of a sell-off. We've heard that from banks, but today we've heard it also from Deutsche Bank strategists who say that high stock valuations and a rapidly advancing earnings cycle is a risk. Bank of America's Savita Subramanian also speaking to Bloomberg about where she sees vulnerability.
The S&P 500 has essentially turned into a 36-year zero coupon bond. If you look at the duration of the market today, it's basically longer duration than it's ever been. So what that means is that any move higher in the cost of capital, be it interest rates, credit spreads, equity risk premia, that's basically going to be a huge knock on the market relative to the sensitivity we've seen in the past.
Well, joining us now to talk markets, we dragged him out of bed. It's early in the morning. Luke Kawa, asset allocation strategist at UBS Asset Management. Luke, so good to speak to you. When you look at some of the market valuations, so are we actually going to see a pullback in markets, or could we see a correction, which just means we're going to get less returns, but not, stocks falling out of bed?
So here we're kind of looking more at the next 10, 20, 30% in equities rather than the next 5. I think, there's any number of reasons why equities could have a 5% correction, but I think I think some of the logic laid out in that clip holds in terms of where would you expect it to play out. So recently, I think what we've seen over the past, call it 2.5 months, is kind of more of a re-rating of the cyclical reopening trade, so to speak, than anything else. So if we did get a slight correction in equities, we would think would be concentrated more in the the high-valued growth stocks, mainly in the U.S. And if you look at kind of the suite or the balance of risks to equities right now, I would suggest that a lot of the downside growth risks are what has been realized, whereas on the other hand, the policy risks, whether it be from U.S. tax being something that more directly affects the earnings power of American-only companies, and in particular, perhaps cyclical growth companies, if you get more of that minimum tax on book income or a guilty tax increase, and as well the macro concerns, if we're looking at the possibility for real yields to rise. That's something that should weigh more acutely on U.S. secular growth, and that's not an area of the market that we prefer.
Luke, when you look at, I like to pull up the GE function on the Bloomberg to look at PEs and just try and find industry groups, sectors where there still is some value and where that could increase. How do you screen for these things, and where do you see value?
So I think the starting point, which you've alluded to, is that valuations on an outright basis, no doubt they're expensive. However, if you look at kind of the earnings yield, so you can measure it a trillion different ways, but essentially deflating the how much equities are expected to earn by the relative bond market yield, it's clear that you're kind of around the floor of last cycle, so you should expect equities to be more in line with earnings going forward as a general matter. But where the valuation is most kind of attractive to us are markets like Europe and Japan, and if we're looking within sectors, more energy and financials. So these are places with still a very healthy earnings yield, and if we're looking at a regional basis, we can't just think about valuation. Valuation without catalyst is an insufficient thesis for a position. So what we actually like is the fact that you do see some catalyst both in Japan in terms of the election shaping up, COVID improving, and in terms of Europe being one of the few places, if any, in the world where growth is actually expected to pick up from 2022 to 2021.
Luke, while we're talking about relative yield, let's talk about the bond market. Do you think we have seen the bottom and/or top in yields this year?
We think that we've seen the bottom in yields this year for sure. It's also possible that we've seen the top. However, for 2022, for 2021 at least. However, we do expect yields to be moving higher from here. If there's a story that the market has been underestimating, in our view, it's that the runway for strong growth is so much longer this cycle than it is last cycle, and that's in large part due to inventory disruptions, due to the fact that household incomes continue to grow at an extremely strong clip, even though they're further bolstered by the amount of excess savings that also still remain. So that's something we see as the direction of travel is likely up, but it has to be a global phenomenon. I think what we saw last cycle is the ability of U.S. yields to really break away from the rest of the world is something that's going to be limited because the Federal Reserve understands that has negative spillovers in terms of the U.S. dollar and the effect on domestic growth and good sensitive sectors.
Luke, what exactly is priced in Chinese assets right now?
That's a good question. I think what's really important is to choose your preferred metric of Chinese equities. If you look at, for instance, CSI 500, a broader measure, more small cap equities, it's performed actually quite well, even among global small caps relative to its peers. However, the major large cap equities, there's a fair degree of risk premium priced in to Chinese equities at this juncture. That's an area we've actually been reducing our underweight to China within EM, so effectively buying back some more Chinese equities. And what we're more focused on is the ability for Chinese macroeconomic policy to stabilize ahead of any turn in Chinese regulatory policy. So we're looking at the spillovers from what happens when Chinese growth stabilizes and where do you want to be when that happens. And we think that's kind of the more cyclical regions and sectors.
Well, let's pivot over to another region, Europe. I was cracking up, Luke, at your tweets yesterday around Madame Lagarde's press conference. Is there a difference between recalibrating and tapering?
There's always a difference when central banks use different words to make you think there's a difference, I think is kind of the only way to answer that question. And I think one thing we've learned about the withdrawal of monetary stimulus is that a lot of it is in how central banks manage it. For instance, in 2013, when it's an abrupt offhand comment to tapering in a place where nobody expected it, it has a huge effect on real yields. But when we spend the entire year talking about tapering and who's talking about tapering, when and for how long, and when that might actually lead to a reduction in bond purchases, that's a conversation that just dulls the impact one would suspect it to have over time.
Yeah, a lot of people who just think that actually central banks are being too kind to the markets. They should just get on with it without all of this guidance. Luke Kawa, asset allocation strategist at UBS Asset Management. Now coming up, more pay for junior bankers. We'll bring in our interview with Ken Moelis. That's coming up shortly, and this is Bloomberg.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, the competition to retain junior bankers is getting more and more intense. Ken Moelis weighs in an exclusive interview with Bloomberg.
Business is booming. And, you know, someone like our firm, I think our last quarter we were up 100% year over year, and our people are up 10%. So you could just do the math. Somebody's working very hard. and I think they deserve to be paid more.
Joining us now is Sonali Basak, Bloomberg's Wall Street correspondent. So, Sonali, what I find fascinating about what Ken Moelis just said is basically the good times keep on rolling for these banks, therefore they can afford to pay their people more. So how long is this going to last?
It could last a while. We know that some other activities have slowed down, at least for this late summer, like IPOs. However, private equity is still sitting on records amount of money. They keep on raising a records amount of money. And they are, you know, regardless of what happens to the banks in terms of M&A, a firm like Moelis & Company, all of these independent banks are faring quite well because there's still a lot of money sitting in SPACs. And they are considered independent. They're considered the ones that are getting the deals done and focusing on largely that and not trading in other capital-intensive businesses.
Sonali, if you were starting out your career all over again today, would you stay in New York and work on Wall Street, or would you head out to the left coast and work for tech?
You know, I'm not going to answer for myself, Matt, but that is certainly a question that is on the minds of a lot of young people. You know, Moelis & Company, and I'm hearing of now a few others, are entering a new vertical crypto comes to mind, fintech, creator economy. Goldman now is all about the creator economy. And those kinds of things, they're not always in New York. Literally, the clients are in Austin, in Denver, in California. They're all over the place. In Florida. The regulatory environment for some of those businesses is much simpler. So, to be a banker today, your job is different than when a lot of the folks that are at the top of these firms have started.
Well, and it's not all about the money anymore, is it? I mean, you do still want a lot of money, I'm sure, and especially the chance to increase your wealth over time. But there are other aspects that are equally important to today's young hires.
Certainly. And, you look at these firms, and more when I talk to young people who are choosing fintechs or tech companies, because remember, the big tech companies are in need of a lot of people with not just financial skills, but some of these coding skills that bankers now also have. They turn their nose up at the banks because the idea that they will kind of reign prominent forever is something that's also not attractive to these young people. I've also got to say, in this business of M&A, Goldman, JP Morgan, and Morgan Stanley each have between 20 and 30% of the market share. After that, it drops off by a lot. So even if you're doing deal making, you have to question whether and where you're going to get the best experience overall.
So, Shonali, is there anything that banks can do to try and adapt to make sure that they get the best young staff, even, either from tech companies or fintech?
Well, beyond pay, which is something that has been attractive to young people, and, beyond flexibility, because a lot of people walking into this job know that they're not going to get flexibility, is time in front of clients, is time that is spent knowing that their career is going somewhere and towards valuable experiences that they can enjoy.
All right, Shonali, thanks so much. Bloomberg's Wall Street reporter, Shonali Bazak. Now, coming up, we'll talk vaccine mandates with Andrew Pekosh, Johns Hopkins Bloomberg School of Public Health professor and virologist. He's coming up at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, tomorrow marks the 20th anniversary of the attacks of September 11th. Wall Street Week reflects back on the event.
America heard the news as it was going to work, going to school, or just waking up.
An airplane has crashed into the World Trade Center. That is a live shot.
17 minutes after the first plane hit the World Trade Center's North Tower, a second plane hit the South Tower.
Oh my God.
President Bush was in Florida visiting an elementary school. His chief of staff leaned over and whispered, "America is under attack." A third plane crashed into the Pentagon. A fourth plane appeared to be heading to Washington, but it crashed in Pennsylvania after passengers and crew tried to regain control from the hijackers. By then, the FAA had taken an unprecedented step. Every airline in U.S. airspace was ordered to land at the nearest airport. 3 days later, President Bush went to Ground Zero. What became known as the global war on terrorism was about to begin.
I can hear you, the rest of the world hears you, and the people who knocked these buildings down will hear all of us soon.
Wall Street never opened on 9/11. The open was delayed after the first plane struck and then canceled after the second plane crashed. Markets wouldn't open until the following Monday. It was the longest shutdown since the Great Depression. Once trading resumed, there was a massive sell-off, the biggest one-day loss in the history of the New York Stock Exchange. The Dow Jones Industrials were down 14%, but by early October, stocks were back up to where they'd been the day before the attacks. Almost an entire generation has grown up since 9/11. On this 20th anniversary, many will join those who can never forget that day and remember the nearly 3,000 people who were lost.
And Bloomberg LP, the parent company of Bloomberg News, has also lost 3 people on September 11th, 2001. You can watch more of our coverage on the anniversary tonight on Wall Street Week. Now, Tom Keene joins us. Tom, you're exceptionally good at capturing these emotions and, of course, reflections. What will be on your mind tomorrow?
On my mind tomorrow is the resiliency of New York City. And I'll tell you, I mean, I remember going down, I was actually looking in an apartment, Francine, a number of years ago in the rebound in Lower Manhattan. Nobody expected that at all. Not only did Lower Manhattan rebound, all rebounded. I'd suggest Washington rebounded. Admiral Stavridis told us the Pentagon, where he was the day of 9/11, Admiral Stavridis told us the Pentagon has rebounded as well.
Well, and Tom, 2 decades later, it's no longer about the rebound from a terror attack like this. It's the rebound from the pandemic, and that's relevant here in New York City and elsewhere.
It is, and I've to put it in the scale of the chart of what we do here at Bloomberg, it is the Standard & Poor's 500, and just simply shows what we did after 9/11. David Weston captured that with the uncertainties of 30 days, and then a rebound, and then, of course, the financial crisis of 2007 and 8. And 9, and then up we go, and many will say why we have exploded higher. This is a normalized chart showing percentage change. And along the way, Kaylee, the pandemic is a blip.
I want to ask about the market today, Tom. We've had more and more analysts come out, strategists come out and say we could be looking at a correction. Deutsche Bank, Goldman Sachs, Morgan Stanley. Is this starting to become a real concern for investors?
Oh, come on, Matt. You've been doing this since time began. David Weston showed Dylan Radigan there on the ancient TV of Bloomberg, and I remember you, Matt Miller, Kaylee Miller. He still was getting carded in bars. It was so long ago. And Matt Miller, you know and I know that when the narrative gets like that, watch out. Everybody's on the wrong side. I loved what Kaylee had on Dominic Wilson of Goldman Sachs, the idea how everybody's narrowed down their guesstimates because they don't have a clue.
Yeah, but to put it simply, Tom, thank you.
You can't imagine Matt Miller when he was 17 working for Bloomberg. I mean, it was almost under.
Yeah, full set of hair, so I'm told.
He actually worked a real day back then.
Really? Now, a look at what else we're watching today. I feel like I need to give you, right of reply first of all, Matt.
I'm just happy to have the half days. Now that I'm older and I've got a little bit more experience and time put in, then I get to go home. I take the surveillance nap, and then I come back later just to watch what's going on.
That's what, seniority gives you. I think Tom also has a surveillance nap. Kaylee, you're looking at data today.
And also looking forward to taking a nap later because it's Friday, Francine. But yes, economic data, 8:30 a.m. Eastern time. We're going to get the PPI read for August. The headline number for the year-on-year number could be massive. 8.2% is what economists are expecting. When you back out food and energy, they're expecting 6.6%. And then for the month-on-month measure, 0.6%. But obviously a very key read on inflation. How much are some of those supply chain issues, those bottlenecks, still impacting producers? And are we going to start to see more of a follow-on from that when we get the CPI print next week, Matt?
Yeah, well, definitely going to continue to keep my eye on that, and also focusing on the German elections here. Our Ian Rogers in Berlin has a great story about how a Schultz-led government could transform Germany and Europe. I think the main question on voters' minds, at least the voters that I talk to, is will Schultz get together with the FDP and the Greens, the Liberals, and the climate concerned, or will he get together with Die Linke, the former Communist Party? That is a real possibility and maybe one that'll swing the balance.
Yeah, I have to say the path forward for coalition building is probably not the easiest thing to look at right now. Matt, I'm looking at the UK economy. So first of all, barely growing in July. This suggests that the recovery from the coronavirus recession may be tougher than expected. It seems like it's rapidly leveling off. Consumer spending actually is weakening and supply disruptions hamper production. And then you couple on top of that tax hike that we heard earlier this week, and we could see on the markets a difference between the way the FTSE goes and other countries such as France, who this morning said, look, we're not going into austerity for the 2022 budget. Partly is because we're looking at a presidential election in April 2022, and no one wants to hike taxes right before an election. Now, more Bloomberg surveillance is coming up ahead. We'll hear from David Page of AXA and many more.
About your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Over medium term, I would expect US growth sensitive assets to outperform.
We think we've actually peaked in the US when it comes to inflation now.
You've got this market that's basically been fed by stimulus.
It's all about the fundamentals. Earnings expectations are still rising.
We're probably in the early stages of the handoff from liquidity-driven markets to earnings-driven markets.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Let's wrap up the trading week from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market, 4 days of losses on the S&P. Equity futures right now up 17 TK. We advanced 0.4%.
It's a bear market, 4 days of losses. That's the headline, John. We have cratered 1.2%.
Brutal.
On the S&P 500. It has been a bloodbath. It's been just terrible. John, you know what? Futures bounced this morning. You can do it in the date as we launch an interesting 3 hours. But I'm sorry, I'm just not going to get wound up.
Noise, not news. Let's get to the news.
Yes.
The president pushing vaccine mandates, Tom Keene.
Well, he's pushing vaccine mandates. Maybe that's why futures are up 17 as well. What I love about it, John, it's the American solution. We don't do it like Singapore. We don't do it like Slovakia. We do it like America, which is the president is turning to business.
Lisa, are we correct in course?
Well, and that seems to be the sentiment, certainly by analysts. I know that, for example, Terry Haynes put out a note saying that this policy of cracking down a little bit harder on the vaccines actually is a market positive. I don't know if we could draw any conclusions from this data. I know that Tom's in there buying this dip. He's eagerly trying to get his hands on the momentum
well,
in the markets.
Rosengren and Kaplan are going to cash, Lisa.
Well,
I don't know what you think of that.
I have very... You really want to get me wound up, don't you?
I'm trying.
Okay, this to me just shows that perhaps the Fed policy is flawed in and of itself, and they need to recognize the influence that they have over markets and change the policy. Because yes, they perhaps really read the room wrong when they made these stock purchases and held on to them. However, it was vetted by lawyers, so it does go directly to policy and how the Fed needs to craft its image a little bit better.
Hey, TK, does Congress follow? Do they have to do the same thing now?
This has been debated since time began. I've got, like everybody else, I've got real strong feelings about this. And, you know, it's what they can do. What bothers me, John, is I believe it's religious that they should be able to buy individual securities. The issue, John, is trading. The difference, John, is I don't trade. You're in and out of all those SPACs, the meme stocks, the IPOs. Folks, we're on break and John is day trading.
Yeah, just to be clear here, John is not, and we'll catch up with Michael McKee about this a little bit later. TK, one day you're going to get me in trouble. Equity futures up 17 on the S&P.
That's the
we
goal.
advanced by 0.4%. Oh, Lisa, I know. In the bond market right now, yields higher by 3 basis points on 10s to 132.75. 5, a big rally worldwide yesterday, not just in the Treasury market.
Yeah, but did Lagarde move the euro? Did Lagarde move the euro?
Not the euro so much, but I think she moved the Italian bond market, Tom.
I saw that. I learned how to look that up yesterday.
Euro dollar right now, 118.37. Lisa, positive on that currency pair, 1/10 of 1%. A bit of dollar weakness out there.
Yeah, I do want to point out, though, that we did see this big bond rally, despite the fact that we got a record 72 hours of corporate bond issuance. So still, even though we have an incredible amount of supply, people don't care. Very strong auction on the 30-year and the 10-year the day before. What I'm looking at today, 8:30 a.m., this is incredibly important to me. The U.S. August PPI data, we've been seeing the producer price increases at the fastest pace going back to the financial crisis and beyond. The question is, how much does this continue, and how much is this feeding into consumer expectations for inflation, which can have a self-determining effect? We have seen those climb to the highest levels going back more than a decade in the Consumer Confidence Board readings. How much does this bleed directly into that? At 9:20 a.m., the NASDAQ is going to hold a 1-minute moment of silence for the 20th anniversary of 9/11. All of us who lost and loved people on that day really feels like yesterday. And this comes, of course, as the United States and the rest of the world tries to climb out of a pandemic. The New York City area, very much the epicenter in some ways because of the work from home kind of revolution and the pandemic hit that it took. And then at 12 p.m., this has flown under the radar for a while, but to me, really feeds into inflation expectations for consumers that we were talking about. The USDA World Agricultural Supply and Demand Report, wheat supplies have been plummeting. Just to put this in perspective, Canada and Russia saw some of those supplies of their crops disrupted because of drought, because of climate change issues that they have highlighted. Meanwhile, the question really comes to the road ahead as we see that global prices of food are nearing a decade high. John, again, how are consumers feeling this inflationary push versus what the Federal Reserve is looking at when deciding when to raise rates?
Lisa, thank you. Let's pick up on that, and we'll go to Dallas Fed President Robert Kaplan on that, on a different story. This is what he had to say in the last 24 hours. This labor supply-demand imbalance is going to be with us for some extended period of time, so that makes me think that you're going to see some broadening in price pressures going into next year. Joining us now is David Page, AXA Investment Manager's Head of Macro Research. David, does that resonate with you, sir, that we could see a broadening in price pressures going into next year?
Yeah, I mean, it's the key debate that every central bank has to sort of focus on. How persistent is this supply shock? There's no question there's a supply shock at the moment, and we're going to see it in Q3 GDP numbers, we think, in the States when they come through. But the question is how persistent. So for now, we've had the view, and we share this view, that we are seeing a relatively transitory supply restraint. So if you look at, for example, participation, it's been very lackluster in recent months. We do expect that to pick up. I think part of this is just a natural indigestion. I don't buy too much that it's due to unemployment benefits. Certainly in states where we've seen that drop back, we haven't seen a miraculous recovery in labour supply. But I think there is a natural indigestion, and I think that indigestion should fade as we move into the fourth quarter. But if it doesn't fade, then you are seeing a more restricted background. You are going to see earnings continue at the sort of relatively elevated monthly pace that we see at the moment. And that's something the Fed has to take account of. Effectively, what you're suggesting, or what it would conclude, is that you're seeing a bigger supply shock from this pandemic. Now, that might be because the workers that we're looking for post-pandemic are different to the ones that were employed pre-pandemic, and there's a skills mismatch. There could be all sorts of issues. We don't think that's what's going to happen, but that's what we're going to see over the next couple of months. And the Fed will have to react if it changes that transitory outlook.
David, you and everybody else is lowering the GDP estimates. You've got 5.7% now, and into next year, 4.3%. Is that a linear extrapolation down to potential GDP?
No, because I think the potential GDP adjustment that's going to come through is a long-term figure, right? So it is a linear extrapolation of the supply shock that we see coming through in the third quarter. We do think that's been an impact. Right. But I don't think it's something that we should therefore extrapolate going forever forwards. We would still see US GDP potential growth, in the fullness of time at somewhere around 2%. So I don't think that's too much of a concern. But in terms of the supply-demand imbalance, which is critical for the sort of inflation pressures, then yeah, I mean, I think it is that supply has reduced rather than a drop-off in demand.
David, investment manager after investment manager has come on this show and said that right now the dynamism of the U.S. economy has been pretty much priced in, and it's time to turn to Europe and potentially even to Asia for equity exposure. Do you agree?
Well, I think the US the US rebound has been remarkable. It's got to the point where we are closing the output gap. We're looking at a very strong growth year next year that's going to continue this excess demand. And I think there's still strength in the US market now. You know, we can talk all you like about whether we see corrections coming up over the next little while. But no, I think, you know, in general, the US equity market is going to remain relatively well underpinned. But in terms of should we switch from a sort of growth model, which is obviously something that the US, you know, really exemplifies, or a more value-driven equity performance, which is perhaps something where Europe will do better, then I think as we start to see real yields pick up towards year-end, we should start to move more into that value area. So I think there is scope certainly for more of a pickup to come through from Europe. But
David, let's wrap things up with the Fed timeline if we can. In the time we have left, we're pushed against the clock here. What are you looking for into the September, the 22nd meeting and beyond? December gets really interesting. The 15th is the Fed, the 16th is the ECB.
So I think as you look at September, they clear the decks and suggest that at any point they could announce taper. They won't do it in September, I don't think. They won't do it at the end of October. I think they'll announce in December and tapering will start in January. And there's a debate about whether it comes a little bit quicker than that. But yeah, you're right. With the Fed likely to announce taper in December, with the ECB clearly lining up a big set of policy moves at that time, the year end is going to be an interesting one for the monetary policy outlook.
David, thank you. Good to hear from you, as always. Enjoy the weekend, sir. David Page, AXA Investment Managers Head of Macro Research. Tom Keene, December could be fascinating.
It's going to be, John,
15th for the Fed, 16th for the ECB.
Thank you for asking David Page that question, because his answer, to me, it's all data dependency. We don't have a clue what's going to happen in December until we get to the November jobs. I don't know what date it is, November 5, I'm guessing. But, you know, you get to November 5, and then you get into November, and that's where you're going to be able to make a determination on December, not now.
Well, President Lagarde indicated, Tom, that's where the decision will be for that big pandemic emergency purchase program.
They'll wait for the data.
Do you think the data is going to make a difference to the ECB hawks, Tom, with the amount of flexibility in that package? I'm not sure how data-dependent that argument actually is.
Help me here. You hang on every word of that press conference. I'm over there looking at Red Sox baseball. The bottom line is, John, I thought the whole thing yesterday was bizarre. It's a new level of splitting of hairs because of the political cards Lagarde has been dealt.
So, Tom, this is what stood out for me.
Please.
They've reduced the pace of purchases, but they're also forecasting inflation way below target and in 2023. So either you've got an efficacy problem, you don't believe your tool is going to help you achieve the inflation objective, or you've got a credibility problem, or both. And that question wasn't really asked too aggressively in that news conference yesterday. I think the ECB president got a little bit of a pass.
And well, how far is that off of what we're going to see the 22nd of September? I mean, the parsing here of all this monetary babble, none of this is in the textbooks. Where we are right now, versus massive fiscal stimulus. David Page has GDP coming down like everybody else, John.
Yeah.
I think we're just completely data dependent.
Well, what did Goldman say, Tom? Dominic Wilson, the range of outcomes really wide, and this market is pricing a set of really narrow outcomes.
You know, John, when you get as old as me, you don't read anymore. Kaylee Lyons reads everything. She brought me that essay. And I'm sorry, Dominic Wilson is absolutely dead on. As the uncertainty goes up, everybody gets narrow on their calls.
And yet, Lisa, the range of outcomes is just wide.
Yeah, and the idea here of, is the cure for inflation more inflation, and will this become a self-limiting kind of cycle that takes it away from the Fed's hands, that takes it away from the ECB's hands?
Here's your equity market this Friday morning. Good morning to you all. Up 17, advancing about 0.4%, following a 4-day losing streak.
Oh, my God.
On the S&P 500. I believe the longest losing streak since June.
It was. We cratered.
Down every day since you've come back to work.
It is. We cratered.
Good to have you back. From New York City, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. In Japan, vaccine czar Taro Kono has declared that he's running to replace outgoing Prime Minister Yoshihide Suga in a ruling party election later this month. Kono says he wants to create a country where no one is left behind. 3 lawmakers are now running to lead the Liberal Democratic Party due to the party's power in Parliament. Its leader is virtually assured of becoming Prime Minister. The Biden administration is growing more frustrated over cabinet-level talks with China. Last night, President Biden urged China's Xi Jinping to cooperate on key issues, even while they battle over other topics. The two spoke by phone for 90 minutes. It was their first conversation since February. President Biden is ordering coronavirus vaccines for millions of people. The president ordered all executive branch employees, federal contractors, and millions of healthcare workers to be vaccinated. He also says his administration will issue rules requiring large private employers to mandate shots or testing. The U.S. Justice Department wants to put a quick stop to a restrictive anti-abortion ban in Texas. The government has sought an emergency injunction to block it long enough for a court to rule it unconstitutional. The law bars almost all abortions after the 6th week of pregnancy. That's before many women know they are even pregnant. Regulators have fined Wells Fargo $250 million over deficiencies in its home lending business. The Office of the Comptroller of the Currency also said the bank violated a 2018 order tied to past consumer missteps. Scandals have plagued Wells Fargo since 2016, starting with the revelation that employees opened millions of fake accounts. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Last night we were at a dinner at a restaurant, and as we were walking out, a man walked over to me and said, "Thank you very much, you paid for my daughter to go to college." And basically I get that all the time. It's the most unbelievable thing. That's my job.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
So tonight, I'm announcing that the Department of Labor is developing an emergency rule to require all employers with 100 or more employees that together employ over 80 million workers to ensure their workforces are fully vaccinated or show a negative test at least once a week.
It's the latest push from the President of the United States from New York City this morning. Good morning. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Here's the price action this Friday morning off the back of 4 days of losses on the S&P 500. Futures are positive, up 18 points on the S&P, advancing 0.4%. Yields with a lift, pushing higher, up 3 basis points on 10s to 132.58. Tom Keene is the President of the United States making the headlines. It's somewhat of a 180 from the leader of this country.
Real big, really interesting, John. I'm just looking at the Kentucky statistics, just not to pick on Senator McConnell, but 14% positivity rate, ICU use 80% in Kentucky. Emily Wilkins knows these statistics. She's with Bloomberg Government in Washington. The heart and matter, Emily, a day after, the morning after, is this word mandate. Who does the mandating for the president?
Well, in this case, he's having it out to a couple different departments who are looking into it. We're doing things with Medicare, Medicaid, hospitals that accept that. Their nurses and doctors need to be vaccinated. With federal contractors, they'll need to have their individuals vaccinated as well. This is really sort of a top-down directive, and it comes as Biden is really hardening his language around these vaccines. Before it was sort of this encouragement, this we can get through it together. The tone that you saw last night, he got almost attacked in a certain sense, those who are unvaccinated, saying that they were really holding back progress.
Yeah, Emily, the governor of Georgia said no. He said, you know, again, it's a states' rights issue. We all know the story. The Jacksonians against Biden at the federal level, great. Georgia responds. What power does Georgia or any other state have to respond to this federal mandate?
I mean, to a certain extent, you have to look at where the federal mandate is, right? It's clear that President Biden was talking with his lawyers and trying to figure out where exactly the federal government can have control over. They have control over their contractors to a certain extent, to hospitals that receive Medicare, Medicaid, that sort of thing. But you're right, Tom, there are a bunch of individuals who aren't going to be subject to any sort of federal mask mandate. And they have a number of governors and Republican legislatures who are saying, no, we're not going to do a ban on mask mandates. In fact, we're going to ban the ban. You're seeing those take off. You are seeing some of them work through the courts, so still some development there on what happens with that. But there's certainly a lot of pushback to these vaccine mandates and the idea that people have to be vaccinated. It's really prevalent in a number of areas in the country, and that doesn't seem to be going away anytime soon.
Emily, this administration has talked up its relationship with the unions. Are the unions on board with this?
To a certain extent, we have heard positive remarks from former head of the AFL-CIO, Richard Trumka, who now, of course, is in the process of being replaced. But he said that he was supportive of this. You have widely seen unions try to back what President Biden is doing, at least at the leadership level. Of course, if you get to the more local level, the story always becomes a little more complicated with who's on board and who isn't.
Meanwhile, we have, of course, the debt ceiling negotiations underway. How much does this harden some of the partisan politics in Washington, D.C., considering what you said earlier, that in some ways he was almost attacking unvaccinated individuals and calling them dangerous for the society?
Well, the debt ceiling is a very interesting debate because the Democrats are basically looking at the Republicans and saying, we expect you to, at the end of the day, support this, no matter how much rhetoric is currently being put out. I mean, you had a number of senators, including Mitch McConnell, say that there was no way that they were going to support any sort of debt ceiling raise. That's something that needs to be done. We're now hearing Janet Yellen saying that the extraordinary measures the Treasury Department are set to run out in October. That's a little bit sooner than some people were thinking of. And so there's definitely